We are going to start today concept of standard costing. It is also termed as variance analysis. Now, what is it? Try to concentrate. CEO of a company who is the company is manufacturing product alpha. Product alpha they are manufacturing. So it is output. For manufacturing product alpha, how many units? 1 kgs of product alpha. This is output or input? Let me write down 1 unit of product alpha. 100 units of product alpha. The raw material required for manufacturing product alpha is raw material X. Raw material X. So raw material X is input or output? This is input. So if you want to manufacture product alpha, which raw material is required? Raw material X. And for 100 units of product alpha, 1000 kgs of raw material X is required at the rate of rupees 10 per kg. How much a total cost will be there? 10,000 rupees for raw material for manufacturing of product alpha. This is my cost given by CEO, right? So CEO says if you want to manufacture 100 units of alpha, you should put in 1000 kgs of raw material X at the rate of rupees 10. So you are given 10,000 rupees. This is what is termed as standard. This is standard given by head of the company that for manufacturing 100 units of output alpha, you should be having input raw material X of 1000 kgs at the rate of rupees 10. Now see the actual figures. Actually, also you are manufacturing 100 units of alpha. So this is same. That is good right now. But the problem is total raw material cost was rupees 12,000. More or less? More. So cost is more. What was the standard cost for raw material? 10,000. What is the actual cost of raw material? 12,000. Difference between these two is termed as variance. Is it positive or negative? It is good or bad? Bad. Why? Cost is increased. By how much rupees? 2000. So it will be termed as a negative variance of 2000 rupees. In which department? Raw material department. Correct. Please understand, this is finding out variance. We also need to learn variance analysis. We also need to learn variance analysis. So this is a huge company and this all rupees are in crores. So what is the negative variance in crores? 2000 crore rupees is negative variance because of material. See, when CEO will see this, he will understand that raw material is using 2000 crore rupees more than expected. What was expected to be used for raw material? 10,000 crore. What raw material department is actually using? 12,000 crore. CEO calls purchase department manager or purchase manager. He calls purchase manager and he fires them. That your salary is not 1 crore rupees per annum. You are having a negative variance of 2000 crore rupees per annum. So you are not a very good manager. So CEO fires him. Right? Is the judgment of CEO good or bad? Is there actual cost increase of 2000 crore rupees because of raw material? Then a person who is having a salary of even say 1 crore, he is taking such a decision that cost of the company has increased by 2, and this is an actual cost, right? Instead of 10,000 crore, which is standard, 12,000 crore is used by this raw material manager. Can you tell me the reasons why there may be variances? Why there is a variance? Wastage of raw material might be one of the reasons that there might be variance. So quantity used will be more. Quantity used will be more. All right. And it would be abnormal wastage, because normal wastage will be considered by standard. Right? When CEO is preparing standard, he will consider that there is a normal wastage, but he will not consider the abnormal wastage. So abnormal wastage might be higher. The standard might be faulty. Right? You bring even God to earth, he will not be able to manufacture 100 units by 1000 kgs. Minimum 1200 kgs are required. The standard might itself be wrong. Right? But in this case, we will be assuming that the standards are properly made and they are absolutely correct. So there is no mistake in preparing the standards. They have taken good judgment while preparing the standards. Please understand, still firing the purchase manager might not be a good option. Let me give you the actual figures. It is rupees 12,000. How many kgs of raw material is used is 1,200 kgs. At the rate of rupees 10. What will be the total cost? 12,000 crore. What was the standard price to purchase the raw material? 10 rupees. What is the actual price at which the raw materials are purchased? 10 rupees. Whose work it is to purchase the raw material? Purchase manager. He is working at 100% efficiency. His variance is not negative. Then why there is a variance? Can you tell me why there is a variance? The variance is because of price or because of usage? Because of usage. The company is using 200 kgs more as compared to standard. And usage of material is the work of production department and not of purchase manager. Right? So who is using raw material more? Production department is more. Who should be fired? Production department manager should be fired, or a person who is storing the raw material. The stores department manager should be fired. Purchase manager is doing his work efficiently as per the standard. And you are new CEO, so you have fired directly which manager? Purchase manager. But the analysis which we are going to do, what was the variance? Minus 2000 crores. The analysis which we are going to do, we will present it to CEO, and from this analysis, the CEO will actually determine that, okay, this is the variance and this is the reason for the variance. Try to concentrate. I am finding out material cost variance. Material cost variance. Try to concentrate what I am doing. Standard quantity into standard price. And I am talking only about raw material right now. Standard quantity into standard price. Actual quantity into standard price and actual quantity into actual price. You'll get each and everything of what we are actually finding it out. What is the standard quantity of raw materials? We are talking everything about raw material. What is the standard quantity of raw material that should be used? 100 units or 1000 kgs. 1000 kgs. Believe me, in standard costing, there is a huge problem in understanding input and output, which is very simple point. You are finding out variance of input and not of output. So what is your input? Raw material X and not product alpha. Then what is product alpha? It is your input or output? Output. So product alpha is your output. We are talking right now about input. How much standard quantity of raw material should be used? 1000 kgs. What was the standard price at which it should be used? 10. What is the answer? Rupees 10,000. What is actual quantity which is used? 1200 kgs. What is the standard price per kg? Same thing, 10 rupees. What is the answer? 12,000 rupees. What is actual quantity which is used? 1200. What is actual price at which it is used? 10. This is how much? Rupees 12,000. Please concentrate. Now I am first finding out variances and then we will be doing analysis of that particular variances. This figure minus this figure. What is the answer? 10,000 minus 12,000 is minus 2,000. Is termed as material usage variance. Is termed as material usage. We are also going to understand it, so don't worry about it. This variance, this answer minus this answer is termed as is how much? 0, which is nothing but material price variance. And total of this two is how much? Minus 2,000 is nothing but which variance? Material cost variance. Now you are a CEO. Try to understand. I'll explain you what we have found out. What is the material cost variance? We can find it out from here. We are CEO of the company. We can also find out the reasons. What is the reason of the variance? Material usage variance is how much? Negative 2,000. So your material cost has first increased or decreased? Increased. Why? Because the variance is negative. Because of usage or because of price? Because of usage. What is the material price variance? What is the variance because of material, raw material price? 0. So the variance is not because of purchase manager. The variance is because of storage manager or production manager. Try to understand when I do this minus this point. What I am actually doing? What is this left hand side answer? Standard quantity into standard price. Standard quantity into standard price minus. What is this answer? Actual quantity into standard price. Actual quantity into standard price. Please try to understand the formula. I'll give you time to write. Standard, can I take anything common? Standard price. What will remain? Standard quantity minus actual quantity. All right. Try to understand in our example what will happen. What is the standard quantity? 1000 kgs. What is actual quantity? 1200 kgs. What is minus 200 kgs? Can you tell me what is minus 200 kgs? It is raw material used. More or less, more. If you are using more raw material, your variance will be negative. You are using raw material more. How many kgs raw material you are using more? 200 kgs. Variance answer cannot be in kgs. All the answers should be converted into rupees. So we are multiplying with a standard rate, which is which rate? 10 rupees. So minus 200 kgs into 10 rupees per kg will be minus 2000 kgs. There is an increase in raw material cost of the company because of usage. Correct. We will not be using this formula. We will be always preparing this type of chart. But you need to understand how this is raw material usage variance. Why it is raw material usage variance? Very simple. It is standard quantity minus actual quantity multiplied by standard price. Instead of using this formula, we can just write down the format. Do this minus this. I will be getting raw material usage variance. Try to concentrate once again over here. What is this variance? Material price variance. How it is found out? This figure minus this figure. Please concentrate. I'll give you time to write. This figure minus this figure. Actual quantity into standard price minus, what is the right hand side column? Actual quantity into actual price. Can I take anything common? Actual quantity. What will remain? Standard price minus actual price. What is standard price in our case? 10. What is actual price in our case? 10. What is a variance because of raw material purchase price? 0. Is it all right? Multiplied by actual quantity. See, if you want to find out price variance, you should do standard price minus actual price. But the answer will be in price per unit. So I need to multiply it with something. And if you want to find out usage variance, it should be standard quantity minus, which is in previous page. Standard quantity minus actual quantity is nothing but usage variance. Now, why standard quantity first and actual quantity afterwards? Why it can't be actual quantity minus standard quantity? It is also variance. Actual quantity minus standard quantity. Why to keep standard quantity first? Standard quantity minus actual quantity instead of actual quantity minus standard quantity.
Standard quantity may be estimated.
It is estimated. It is not maybe estimated. It is estimated.
And what we actually use, we can know that we have used more or less.
Exactly. Try to understand. The sign will give you answer of variance. Standard is 100. Standard quantity minus actual quantity. Standard is 100 kgs. You are using 80 kgs. It is good or bad? Standard is 100 kgs, but you are using only 80 kg. So it is a positive variance or negative variance? Positive variance. I will be getting answer positive. Standard is 2000 kgs and actual is 2500 kgs. It is good or bad? Bad. You are using more kgs than expected. Answer automatically will be negative. So if you do standard minus actual, the positive figure will show you a positive variance. That means your cost is saved. And your negative figure will show you your negative variance, that is your cost has increased. All right. And I will be not using this formulas. I will be directly using this. So you need to just remember this heading. And I am once again taking a small example and we are trying to find out both the variance. To manufacture 1000 units of beta, We can write down this. For manufacturing 1000 units of beta, kgs of raw material X is to be used. 100 kgs at the rate of rupees 5, and which is 500 rupees. For 1000 units of beta, you need to use 100 kgs of raw material. Is it possible? Yes or no? Yeah, there is no relationship between input and output, right? From one potato, you can make 10 dishes of pani puri. Is it all right? So from 1 kgs of potatoes, you can make 100 units of pani puri dishes. All right. So there is no relationship between this figure and this figure. But you need to understand this is input and this is output. And your actual figures are, you have again manufactured 1000 units of beta, that is as per standard, and you have used raw material X as follows. You have used 110 kgs of raw material at the rate of rupees 4, which is 440 rupees. Can you tell me something about overall figure? Whether your overall variance of material is positive or negative? Positive. Always do this in mind. Standard minus actual. Because we know standard minus actual, if positive, it is a positive variance. If negative, it is a negative variance. What is standard? Total? 500 rupees. Actual total? 440. 500 minus 440 will be positive 60. So you are having a positive variance of 60 rupees. But this is the total variance. We have not done any analysis of the variance. Try to concentrate. I am doing variance analysis not by formula but by a simple chart. You need to understand the sequence of the chart. We need to understand sequence of the chart. It will always remain same. Standard quantity into standard price, first column. Actual quantity into standard price, second column. Actual quantity into actual price, third column. And please understand, sir, if we forget in the examination that first it was a standard or first it was actual, it will be always a standard minus actual, and we are doing this figure minus this figure. So we will start with standard and we'll end with actual. All right. Difference between these two answer. We have done it in previous example. What is this? Material usage variance. Difference between this and this is material price variance. And total of this two, now it is total, is material cost variance, and I know answer of this variance. It is nothing but positive 60. So it should come positive 60. Standard quantity. Standard quantity is 100 kgs. Into standard price is rupees 5. So this is rupees 500. Actual quantity is 110 kgs. Multiplied by standard price is 5. So it is a 550 rupees. You cannot take 4 over here. Actual quantity is 110 kgs. multiplied by actual price is 4 is rupees 440. I am finding out material usage variance. Give me the art of solving the question. This figure minus this figure. So it is a 50 minus 550. 50 minus 550. It is minus 500. Sorry, 500 minus 550 will be minus 50. $550 minus 450 plus 110. 550 minus 440 will be nothing but 110. What is minus 50? Material usage variance plus 110 material price variance plus 60 total material cost variance. Should you fire production department manager? Yes. Is he using more quantity? Yes. Sir, from where to see? Directly see this variance. Material usage variance is positive or negative? Negative. Negative does not mean he is using less quantity. Negative means because of him the cost is increasing. Material usage variance is positive or negative? Negative. Are you using more material, raw material than required? Yes. How much you are using? Instead of 100, you are using 110. Material price variance is positive or negative? Positive. So you should give bonus to your purchase manager. If the rupees are in crores, he has saved your 110 crore rupees. So total material variance, because of usage there is a negative variance of 50, because of purchase price there is a positive variance of 110, total variance is positive 60. How material price variance is coming positive? What CU has told you, per kg you should purchase at what price? 5. You are a good negotiator. At what rate you are purchasing? 4. So you are having good purchasing capability. Standard is 5, but for same quality of raw material you are purchasing at 4. You should be motivated. Yes, you will be motivated because material price variance will be positive, and it will be positive by 110 rupees. Still, a person who is using the material should be fired because of him there is a negative 50 crore rupees variance because he is using raw material. Plus 60 can directly be found out rather than totaling this out, this plus this. What we can do is also this minus this. Help me out. 500 minus 440. It is plus 60. It can be found out by this also. It is nothing but this minus this. What is this? Standard quantity into standard price. This is actual quantity into yes. So what we'll be doing is I am going to write down formula for all three variances that we have learned. Material usage variance, material price variance, and material cost variance. It is not expected from you to learn the formula. What we'll be learning is only this sequence, and then we will be understanding from left hand side we will be subtracting right hand side figure, and I will be getting first which variance I will be getting, usage, and then which variance I will be getting, price variance. But see, I am writing formula for material usage variance. Please concentrate. What is material usage variance? Standard quantity minus actual quantity. But the answer will be either in kgs or units. So it is multiplied by standard quantity, which I'll be getting answer, standard price. I will be getting answer of material usage variance. Material price variance. How to logically find out material price variance? Standard price minus actual price is my price variance, but the answer will be in per unit. So I need to multiply it with actual. Material cost variance. Please concentrate material cost variance. It is standard quantity multiplied by standard price minus actual quantity multiplied by actual. Will be answer of what? Material cost variance. How we will be learning this? We will not be learning any formula, but we will be learning the sequence. What is the sequence? Standard quantity into standard price. Then actual quantity into standard price. And then actual quantity into this minus this will be material usage variance. This minus this will be material price variance, and this plus this or this minus this will be total material cost variance. All right. So the formula is automatically understood. See, please understand, when we are doing this minus this, it is nothing but standard quantity minus actual quantity multiplied by standard price. Standard price is taken as common. Standard quantity minus actual quantity. We are doing the same thing, but we are doing it in a different format. When we'll be learning this, believe me, the material, finding out material variances will be extremely easy. Let us go to a most difficult point as far as standard costing is concerned. So try to concentrate. This is where the student makes most, they are having most problem in this particular point. Still, this point is very generic and easy. There is nothing difficult about it. A company, say X Limited, the data is of X Limited. They give you standard. They have given you standard, and this is your standard. Standard cost for manufacturing 1 unit of alpha. What is alpha? Input or output? Output. Standard cost for manufacturing 1 unit of alpha, it is given. What will be required? Raw material Y. How much kgs will be required? What is the price per kg? And what is the total? This all is given by company. It is given by CEO. It is given by head office. They say for manufacturing 1 unit of alpha, 100 kgs of raw material will be required at a price of rupees 10, which is 1000 rupees. Right? You have actually manufactured by using this many kgs. Please try to concentrate. Again, raw material Y is there. You have actually used 500 into 100. You have actually used 51,000 kgs of raw material at a price of rupees 11. Can you help me out? 51,000 into 11, what is the total? 5 lakh 61. 5 lakh 61,000 rupees. The problem is we cannot compare this. This is how many kgs of raw material used? 51,000 kgs. And what is the standard? 100 kgs. Now the figures are weird. 51,000 for the thing which you want to manufacture by using 100 kgs of raw material, someone is using 51,000 kgs. There is something wrong in it, right? Why the actual figures are there? See, what is this? Actual cost for actual output, and actual output is 500 units of alpha. What is actual output? 500 units of. Can this two be compared? Why? The standard is of 1 unit and the actual output is of 500 units. See, you cannot compare a cost of 1 unit with cost of 500 units. Cost of 500 units will always be higher. All right. You cannot compare cost of 1 unit with cost of 500 units. All right. Please understand, this is a base question, so try to concentrate. Here it is 1 and 500. In your examination question, it will be 480 and 500. So you will try to compare it, right? But a cost between 480 units of output and 500 units of output cannot be compared. Then standard cost should be for how many units? Standard cost is actually for how many units given? 1 unit. Is it? You cannot compare it with the standard cost of 500 units. And that is very simple. To manufacture this one pen, one refill is required. Then to manufacture 10,000 pen, 10,000 refills will be required. You cannot compare one pen, one refill with 10,000 refills. So what we can compare, please try to understand. This is, I'm again writing it down. Standard cost for standard output, and in our case it is 1 unit. What is this? Actual cost of actual output, which is how many units? And we all are clear this two cannot be compared. Let me find out something else over here, which is standard cost for actual output. First, tell me what is actual output. Let me write it down over here. What is actual output? 1 unit or 500 units? 500 units. Right? Kgs, rate, and total. Which is raw material? Raw material Y. How to find out? I want to find out standard or I want to find out actual? I want to find out standard. Standard cost for actual output. What is the standard usage for manufacturing 1 unit of alpha? 100 kgs. Then what will be standard usage for manufacturing 500 units of alpha? You just need to multiply it. 100 is for how many units? 100 kgs is for how many units? 1 unit. Then for 500 units, how much number of kgs should be used? What is the answer? What is 50,000 kgs? standard usage for actual output. See, once again, try to concentrate. If I am manufacturing 500 units, CEO has allowed me to use 50,000 kgs and not 100 kgs. CEO has given standard 100 kgs for 1 unit of output. If I'm actually manufacturing 500 units, I will be having 50,000 kgs for usage. Rate is always per unit. So I can directly take this, right? 10 rupees is per unit. So I can directly take this. What is total? 5 lakhs rupees. See, please try to understand again all the figures. If you are actually manufacturing 500 units, the standard usage will be 50,000 kgs at the rate of rupees 10. So you should purchase and use your raw material in 5 lakhs rupees, which you are doing it actually at 5 lakh 61,000. Now can these two figures be compared? Yes or no? Why? One is the standard for 500 units and another is for actual for 500 units. To compare two charts, these two should be same. Let me once again write it down. Standard cost for standard output and actual cost for actual output can be compared or cannot be compared? Cannot be compared. What can be compared? Can you help me out? Standard cost. Standard cost for actual output can be compared with actual cost for actual output. And see, for comparison, it is extremely logical and simple. You are comparing standard cost with actual cost, but the base should be same. Standard cost should be for 500 units, then actual cost should be also for, but then only you can compare standard cost with actual cost. So this two blue color chart can be compared. This two cannot be compared because this is just for units. And as we have done this question, I am also finding out a raw material cost variance. Please concentrate and I will be finding out all the variances related to raw material. How we find out total variance of raw material? What is the sequence? Standard quantity into standard price. Then actual quantity into standard price, then actual quantity into actual price. We can compare only this two chart. Forget about this chart now. Now this chart is not important for us. What is standard quantity? 50,000 kgs. What is standard price? 10 rupees. What is the answer? Rupees. Actual quantity. What is actual quantity? 51,000 kgs at a standard price, which is 10. What is the answer? Rupees 5 lakh 10,000. What is actual quantity? 51,000. What is actual price? 11. What is the answer? 51,000 into 11. 5 lakh 61,000 rupees. This minus this, you cannot do 5 lakh 10,000 minus 5 lakh. You will have to do 5 lakh minus 5 lakh 10,000 will be minus 10,000. What will be name of this variance? Material usage variance. This minus this, what is the answer? Minus 51,000. What will be this variance? Material price. total of this two or this minus this, answer would be same, will be negative 61,000 rupees variance. You are incurring more cost in usage and purchase of raw material or less cost? More cost, it can be seen. You are using more material or less material? More material, it can be seen from here. And what is the loss or what is the increase in cost because of usage? Minus 10,000. You are using raw material at a higher cost, purchasing raw material at a higher cost or at a lower cost? Higher cost, it can be seen from this negative sign. And because of that, you are losing how much money? 51,000 rupees, or your cost has increased by 51,000 rupees. So all variances can, and you need to write down this is material cost variance. Is this absolutely all right? We can go for you understood this, right? We were having standard for 1 unit of output. What can be compared is actual standard cost for actual output with actual cost for actual output. I am writing down the chart for raw material cost variance. Write down, it is the standard quantity into standard price will be my first column. Revised actual quantity multiplied by standard price will be my second column. Actual quantity into standard price will be my third column, and actual quantity into actual price will be my fourth column. This minus this will be termed as material yield variance. This minus this will be termed as material mix variance. This plus this will be termed as material usage variance. Whereby material usage variance can also be found out by this minus this. And we have done this. Standard quantity into standard price minus actual quantity into standard price is nothing but material usage variance. This minus this will be material price variance, and this plus this is nothing but a total material cost variance. Sir, these two are something new. We'll be understanding this concept when we solve our actual questions. What is revised actual quantity? What is yield variance and material mix variance? But from this chart, it should be clear that they are part of material usage variance. Let us solve some of the questions of material, and we can easily go ahead. See 13.1. UV Limited presents the following information for November. Calculate the cost variances. budgeted production of product P is 200 units. Please understand where I am writing down. Budgeted production of product P. What will be product P? Can you tell me, input or output? Product P. It is output. And the standard output is 200 units. Standard output is 200 units. Standard consumption of raw material is 2 kg per unit of P. Alright. What will be standard kgs? It is 2 kgs per unit of P. Can you tell me how many kgs? 400 kgs. All of you agree? Standard price of material A. So raw material name is A. What is raw material is A? Is rupees 6 per kg. So standard rate is 6 per kg. Total will be 2000. This is all as standard, right? Actually 250 units of P were produced. What is P first? Input or output? Output. And 250 is what? 250 units. Standard output or actual output? Actual output. Actual cost for actual output, which is 250 units, were produced. Material A was purchased at 8 per kg. Raw material A was purchased at 8 per kg and consume 1.8 kgs per unit of P. Can you tell me the usage? 1.8 into 250. Very simple. How many units you have manufactured? 250. What is your usage rate? 1.8 per unit. 1.8 kg per unit. How many kgs you have totally used? 250 into 1.8. It is how much? 450 kgs. 450 into 8. 3000. This is total. See, now the figures are very near, right? 450, 400, 3600, 2400. And here is where student does mistake. They directly compare this two, which cannot be compared. Why it cannot be compared? Standard is for how many units of output? 200. And actual is for how many units of output? 250. Some cost which is of 200 units and a cost which is of 250 units cannot be compared. What I will be finding it out? Standard cost for actual output. Raw material A. Kgs. Rate. Total. What is actual output? First tell me. 200 units or 250 units? 250 units. So I need to find out standard for actual output. See, I always do this. For 200 units of output, 400 kgs is required. Then for 250 units of output, how many kgs will be required? For 200 output, 400 kgs is required. Then for 250 output, how many kgs will be required? It is 500 kgs. The rate is per unit. Now per unit rate for 200 units or 250 units does not change. So the rate I can take it 6. What is the total cost? 3000. Don't do this in examination, but now forget this. This was just our base to solve the question. What can be compared is a standard cost of actual output with actual cost of actual output. Now this two can be compared in our chart. These are raw materials, standard quantity into standard price, actual quantity into standard price, actual quantity into actual price. Raw material name is A. Standard quantity is 500 into standard price is 6, which is 3000 rupees. Actual quantity is 450 into standard price is 6. What is the answer? 2700. Actual quantity is 450 and actual price is 8, which will be 3600 rupees. This minus this, 3000 minus 2700 is positive 300. This is material usage variance. This is negative 900. Is material price variance. Total of this two is minus 600, or I can also do 3000 minus 3600 is minus 600. This is nothing but material cost variance. All of you got this idea? This two can be compared. See, it is as logical as this. Otherwise, variance calculation will be very easy. Try to concentrate. I tell to my office that we are going to start a new foundation batch. For 20 students, I am telling to Drashti ma'am and Dashath that I will give you all the money. You will have to pay to all the faculty. And for 20 students, I will give you 2 lakhs of rupees. Alright. They actually spend 4 lakh 20,000 rupees. I was not happy. But my evaluation is incorrect. Try to understand directly. You cannot compare with 2 lakh and 4 lakh 20,000 rupees. 2 lakhs was a budget for or standard for 20. I need to see how many actual number of students are studying. Actual number of students were 50 students. Can 2 lakhs and 4 lakh 20,000 be compared? Why not? One is for 20 students and one is for 50 students. Then how we are actually comparing right now? Try to concentrate. If for 20 students, the standard is 2 lakhs. Then for 50 students, standard will be how much? Will be 5 lakhs rupees. Now we are forgetting this. See, if the standard is given for 20 students, convert the standard for 50 students because actually 50 students are studying. Now you can compare this with this. Why? Because the base is same. The cost base should be same. The cost for teaching 50 students should be compared with actual cost of teaching 50 students. This is what we are doing over here. Why we didn't compare this? Because this was for 200 units. This was for 250 units. You cannot compare of cost of 200 units with cost of 250 units. We are going to 13.2. XYZ Limited produces an article and uses a mixture of material X and Y. The standard quantity and prices for 1 unit of output is as under. The standard is given for how many units of output? 1 unit of output. There are two types of raw material, X and Y. So there are two types of raw material, X and Y. For 1 unit of output, 31 lakh kgs, no, 2000 kgs of X is required. What is X and Y? Raw material or output? Raw material. 2000 kgs of X is required and 800 kgs of Y is required. The rate is 1 and 1.5. Total, believe me, it is not important. 2000 and it is 1200. Let me see what other else is given. During a period, 1500 units were produced. Tell me what is this? Actual output. It is 1500 units. So my actual output is 1500 units. Two raw materials will be used, X and Y. 31 lakh kgs of X is used. And 12 lakh 50,000 kgs of Y is used. At a rate of 1.10 and 1.60. Total will be 31 lakh into 1.1. It is? It cannot be 3 lakhs. 4 lakh 34 lakh 10,000. And 12 lakh 50,000 into 1.6. 20 lakhs. Total is 54 lakh 10,000. Help me out. Can this two be compared? Yes or no? Why no? The standard is for 1 unit of output and actual is for 1500 units of output. What we will do? We will convert this standard of 1 unit of output into standard of 1500 units of output, and it is just cross multiplication. Raw material X, Y, kgs, rate and total. 1 unit requires 2000 kgs of X. Then 1500 units will require how much? 1500 into 2000. It is how much? 30 lakhs. 1 unit of output requires 800 kgs of Y. Then 1500 kgs of raw material required 12 lakh kgs of Y. Rate, as I told you, will remain 1 and 1.5 because it is per unit of raw material, per kg of raw material. This is 30 lakhs. This is 18 lakhs. Total is 48 lakhs. I am doing total of kgs also. This is 42 lakhs kgs. This is 43 lakh 50,000. All right. Please concentrate. Can I compare this to? Yes or no? Yes. Why? Standard is for 1500 units of output and actual is also for 1500 units of output. Now I can compare these two charts. This chart now is useless for me for as far as comparison is concerned. Here I will be doing full-fledged raw material variance. This is name of raw material. Standard quantity into standard price. Revised actual quantity into standard price. Actual quantity into standard price. And actual quantity into actual price. I think first, third and fourth column you can do it. Raw material are X and Y. Standard cages are 30 lakhs and 12 lakhs. 30 lakhs, 12 lakhs. Standard price is 1 and 1.5. Actual quantity is 31 lakh and 12 lakh 50,000. 31 lakh, 12 lakh 50,000 into actual price is 1.1 and 1.6. Actual quantity is 31 lakhs and 12 lakh 50,000. I want total of this all. This is 48 lakhs rupees. ₹54 lakh 10,000 rupees. This will be 31 lakhs, 12 lakh 50,000 into 1.5 plus 31 lakhs, 49 lakh 75,000. See, in our normal chart, we know this, right? This minus this is material usage variance. We can even find it out easily. 48 lakhs minus 49 lakh 75,000, it is minus 1 lakh 75,000. And this minus this is, it is how much first? It is again minus, right? 4 lakh 35,000. And what is the name of this? Material price variance. and total of this two will be material cost variance. Which will be 48 minus 54, that is 6,10,000. Let us understand one new point. Do you understand that the material used is more? Material used is more, and even the price used is more. The price at which the raw material is purchased is more because both variants are negative. What is the negative variance because of usage? Minus 1,75,000. And what is the variance because you have purchased at higher price? It is negative 4,35,000. We are internally analyzing even the usage variance. First, try to understand what is the meaning of revised actual quantity. We are finding out RAQ, that is revised actual quantity. And it is as simple as this. It is actual quantity in standard ratio. Can you tell me what is the total actual quantity of X and Y which is used? The total actual quantity of X and Y which is used. 43 lakh 50,000 kgs. It is 43 lakh 50,000 kgs. I want this in standard ratio. What is the standard usage ratio of raw material X and Y? 30 is to 12 or 30 lakhs is to 12 lakhs, which is same as 30 is to 12. So I am distributing this 43 lakh 50,000, which is actual quantity total, in standard ratio, which is the 30 is to 12. So 43 lakh 50,000 in the ratio of 30 is to 12. It is the 31 lakh 7,142. And what is the remaining figure? I will even logically explain you this two figures. But it is not 31 lakh and 12 lakh 50,000. What the answer is coming? 31 lakh and 12 lakh 50,000? No. It is coming something else. What is 31 lakh and 12 lakh 50,000? Can you tell me? 31 lakh and 12 lakh 50,000. It is actual quantity in actual ratio. It is actual quantity used in actual ratio. Then what is this? 30 and 12 lakhs, 30 lakhs and 12 lakhs. It is the standard quantity in standard ratio. What I wanted in revised actual quantity? Actual quantity, but in standard ratio. So this is the calculation. I'll tell you logically what is this. It is actual quantity in standard ratio. I can first use it in my chart. 31 lakh 7,142. And this is 12,42,858. I want total answer. What is total? This is 6,000 and this is total is 12,000. But this is not important. Please concentrate. The standard loss is the 20% of total input. Please understand how much total input we have done. 150 plus 100. This is my total input. This is how much? 250. And then there is a standard loss, or it is termed as a normal loss. What is normal loss? 20% of total input. What is 20% of 250? 50. What will be 200 liters? Can you tell me? Will be your normal output. That is nothing but standard output. Normal output is standard output. So this all figures is for 250 liters or 200 liters. This is only for 200 liters. See what your CEO says. Normally, if you will input to 50 liters, you will be getting output of 200 liters. So all this cost is for 200 liters. Let me go to actual. The cost record for the period exhibits the following consumption. P 140 liters. This is raw material P, Q, liters, rate, total. And it is actual cost for actual output. The cost record for the period exhibits the following consumption. 140 liters of P, 110 liters of Q, 42 per liter of P, 56 per liter of 140 into 42 will be 5880. Hundred and 10 into 56 will be 6160. $12,040. What is actual output? Quantity produced was 195 liters. What is this actual output? It is 195 liters. This is where the question will become difficult. Can we compare this to? Can you tell me, can we compare this to? Yes, no. Why? Standard is for 200 liters and actual cost is for 195 liters. We need to find out standard cost for actual output, which is how much? 195 liters. How to do it? Please try to understand. You will have to do some reverse working. How many raw materials are required? X and Y, two types of raw material. Sorry, P and Q. Total liters required. Rate and total. Rate will remain 40 and 60 because it is per liter. But try to understand, this is something new. We want actual output of how much liters? 195 liters. So we want 195 liters of output. Agreed? What is normal loss? 20%? Do 20% of 195. which you should not do. 20% is of, you have calculated here 20% of 200 or 250. You have, this 50 is a 20% of what? 250. Here this is final figure 195 liters. You cannot calculate a 20% of this figure, right? Then how to find out normal loss? Can you tell me? If your output is 195 liters, your normal loss is 20% of input. What should be your input? Can anyone help me out? How you will find it out? Exactly. You can do this. If this is 100, this will be 20 and this will be 80. Just do cross multiplication, you will be getting the answer. It is how much? I want for this 100. 243.75 liters. All right. You can just distribute it in the standard ratio. What is the standard ratio? 3:2. 243.75 can be distributed in standard ratio, which is 3:2. Sir, is this revised actual quantity? No, they are standard quantity for actual output. I'll explain you even this each in every individual figure in detail. What is first the answer? P. It is 146.25 and this is liters. Can you give me answer of normal loss even? Someone told me. 48. Try to concentrate over here only. Total is just multiplication. Try to concentrate. If you want 195 liters of output, CEO has already allowed a loss of 48.75 liters. So allowed input to manufacture 195 liters of output in total will be 243.75 liters. If allowed total input is 243.75, you can use 146.25 liters of P and 97.5 liters of Q. This will be standard input of P and Q required to manufacture 195 liters of output, which is nothing but standard cost for actual output. This is actual cost for actual output. This can be compared. What is the total answer of this? 185850 and this is 5850. Total is 11,000. Can I compare this to? The answer is yes. This cannot be compared, but this can always be compared. You can even rub this. All right. Don't do it in examination, but that is not important for the purpose of comparison. We are going to learn our variance analysis. Raw material, standard quantity into standard price, revised actual quantity into standard price, actual quantity into actual price, actual quantity into standard price, and actual quantity into actual. Raw material are P and Q. Standard quantity is 146.25 and 97.50. Standard price is 40 and 60. Actual quantity is 140 and 110. Standard price is 40 and 60. 40 and 60. Actual price is 42 and 56. I will be finding out all the figures. 146.25 multiplied by 40. 5850. This is also 5850. Total is 11,700. 5880. 6160. 12,040. 140 into 40. I need to find out revised actual quantity. Help me out. What is revised actual quantity? It is actual quantity in standard ratio. Actual quantity is 250, right? We are talking about output or input. We are talking only about input. We are finding out variances of raw material. So what is your actual input is 250 liters. In standard ratio, I already know the standard ratio. It is 3:2, right? This is divided in the ratio of 3:2. The ratio will be 3:2. It is 150 and 100. What is 150 and 100? Actual quantity in standard ratio. What is 146.25 and 97.50? Standard quantity in standard ratio. What is 150, 140 and 110? It is actual quantity in actual ratio. 150 and 100. This will be 6,000. 6,000. Total will be material yield variance will be minus 300. Material mix variance will be negative. Material usage variance will be negative 500. Material price variance plus 160. This will be 340 minus material cost variance. Material price variance is negative or positive? Material price variance. Positive. What does it mean? You are purchasing raw material at lower cost. Try to concentrate and see this. What is the standard rate? 40. At what rate you are purchasing? 42. You are purchasing at higher rate. And this raw material of 60 you are purchasing at 56. So net raw material price variance is coming positive. Otherwise, raw material price variance of product P is negative and product Q is positive. But we are not finding out individual answers. This is how we solve variances for material cost. What we'll be doing is, first we'll be revising our material cost variance, and then we'll be continuing with the labor cost variance or wages cost variance. So what we have completed is material cost variance. How we find out material cost variances? By drawing a specific chart in a specific sequence. I will be getting answer of all variances, whereby I start with standard quantity into standard price, then revised actual quantity into standard price, actual quantity into standard price, and actual quantity into actual price. This all is of raw material and not of output. So when I say standard quantity, it is the standard quantity of raw material for actual output. Standard price is also for raw material. So this is a raw material cost variance. Difference between this and this. What will be the answer? Material yield variance. This and this, material mix variance. Total of this two, material usage variance. This is material price variance, and this is a total material cost variance. Let us understand in this, if this is negative, what does this mean? Total material usage is higher as compared to standard. Not the mixture, but the usage is higher. If this is negative, what does it mean? You are using more of a costlier material and less of a cheaper material. Yes, sir, it is a problem of usage. I understand. But this variance is not negative, not because you are using total material more, because you are using costlier material more and cheaper material. Yes. And both of this are under usage, and so total of this will be negative and it will be material usage variance. If this is positive, what does this mean? Material price variance. If it is positive, you are buying at a lower price. Even if it is positive, you are buying at a lower price, so your variance is favorable or positive. And if total material cost variance is positive, what does this mean? You are expending less as far as the raw material is concerned. It may be because of price, it may be because of usage, but the total material cost is lower as compared to standard. What two things we compare as far as the standard and actual is concerned? What we compare? Standard material for actual output. I compare it with actual material or actual material cost for standard output, for actual output. So it is very easy to understand. The base remains actual output. Standard for actual output and actual for actual output is compared for variances. We are going to do something related to labor cost variance. Try to understand basic of labor cost variance. It is the same as a raw material, because raw material is also a direct cost and wages is also a direct cost. So the calculation will look similar, but here there will not be quantity, there will be number of hours, standard hours instead of standard quantity. Try to concentrate. I am writing a basic chart. Standard hours into standard rate. Standard rate per kg, per unit or per hour? Per hour. Then it is actual hour into standard rate, actual hour into actual rate. Right. It looks exactly same as raw material. It is exactly same as raw material, just my quantity instead of kg is converted into hours and rate per kg is converted into rate per hour. The difference between this and this, we term it as raw material usage variance. Now it is not proper to use the word labor usage variance. You don't use labor, right? So I will be using the word efficiency variance. What does efficiency variance basically means? If it is positive, labor efficiency is higher as compared to standard. And if it is negative, labor efficiency is lower as compared to standard. This is efficiency variance. This will be labor rate variance. Total will be labor cost variance. Please understand, if I am talking about 100 units of output, which is manufactured by this group of laborers working for this many hours, what is difference between this two, this minus this? Can I say it is a standard rate taken common? It is the standard hours minus actual hours. So try to concentrate. If standard hours for manufacturing this 100 unit of output was say 1000 hours, 1000 hours was standard hours, but actual hours taken for manufacturing this 100 units of output is 900 hours. This is standard hours for manufacturing 1 unit of output or 100 unit of output? 100 unit of output. And 900 hours is actual hours taken for manufacturing 100 units of output. It is good. What CEO has told, in how many hours you will have to manufacture? 1000 hours. In how many hours the workers are manufacturing? 900 hours. There will be a benefit. We have learned this in labor. The efficiency is higher. The company will be benefited. How it will be benefited? Now they will have to pay only for 900 hours. So efficiency is higher. Efficiency is higher by 100 hours. But here we don't want answer in hours. We want answer in rupees, right? So we multiply it with which rate? Standard rate. The efficiency is higher, the answer will come positive. Suppose rate is 10 rupees per hour. This will be, let me take it, 20 rupees per hour. This will be 2000 rupees positive variance. And it is also even logical. Try to understand. How much hours was decided you will pay for 1000 as per standard? So you might have ended up paying 1000 hours into 20 rupees, which is how much? 20,000 rupees. Now you will be paying for 1000 hours or you will be paying for 900 hours. 900 hours into 20. What would be your actual cost? 18,000. So how much rupees you are saving because of efficiency of labor is 2000. Yes, we have done even labor chapter, right? If the efficiency is higher, you should give bonus to your employee. Out of the savings of this 2000 rupees, you should transfer it to labor. That is a different thing. But right now we are understanding that efficiency of the labor is higher or it is lower. All right. What is this minus this? What can I take common? Actual hours. So standard rate minus actual rate multiplied by actual hours is labor rate variance. If the standard rate was 20 rupees, but somehow you are paying only 18 rupees, you have negotiated with laborer that we will give you good atmosphere, will give you good motivation, will give you good training, but your rate per hour will be 80. Then you will be saving money because of labor rate variance. If the rate is 22, then labor rate variance will be negative. You are paying higher to the laborer as compared to standard. If it is positive, you are paying lower to the laborer as compared to standard. This will be labor cost variance. Try to concentrate over here. I am just adding one or two more points in this labor variance. I started with standard hours into standard rate, revised actual hours into standard rate, actual hours into standard rate, and actual hours into actual rate. Standard hours into standard rate minus revised actual hours into standard rate, this minus this will be termed as labor sub-efficiency variance. This minus this will be labor mix variance. This plus this will be labor efficiency variance. This minus this will be labor rate variance, and this plus this will be labor cost variance. Can you relate it to something? We have done the same thing in material. Instead of labor mix variance, it will be raw material mix variance or quantity mix variance, material mix variance. Sir, why this name is a sub-efficiency? Because this name is efficiency variance, right? You cannot give this name as a efficiency variance. So what is termed over here? Sub-efficiency. In raw material, what this variance was termed as? Anyone remembers? Yield variance. All right. And the concept will be same. Try to understand. If this variance is negative, that means your workers are working number of more hours. If this variance is negative, try to understand there are two types of workers, say skilled worker and unskilled worker. Skilled worker will be paid more and unskilled worker will be paid less. You will have to use the combination of skilled worker and unskilled worker for a particular task. If this variance is negative, what does it mean? You are working with more skilled worker and less unskilled worker. Skilled worker are paid more or less? More. So you are using a costlier labor more and cheaper labor less as compared to standard. As compared to standard, you are using it less. We have done material mix variance. Can you relate it to it and tell me what will be revised actual hours? What is the revised actual quantity? Tell me first that, then only you can understand it. It is actual quantity in standard ratio. What will be revised actual hours? Actual hours in standard ratio. So the concept is absolutely same as of material. All right. There is one more chart for labor variance. That will be learning. In labor, you can do this standard hours into standard rate. Net actual hours into standard rate. Actual hours into standard rate. And actual hours into actual rate. Do you understand? We have just made changes over here. Instead of revised actual hours, we have treated net actual hours. Let me take a small example. Say standard hours was 1000 hours and standard rate was rupees 20. It is rupees 20,000. Actual hours were 900 hours at a standard rate of 20. Standard rate remains same, right? Which is rupees 18,000. Actual hours are 900 into 21. Can you help me out? Actual rate will change. 18,900. We understand this, right? This is labor rate variance. We also know 20,000 minus 18,000 is efficiency variance, right? 20,000 minus 18,000 is efficiency variance. All right. How much actual hours are work? Can you tell me? 900. And what are standard hours for this, say, one job? 1000 hours. All right. Actual hours work are 900. But even out of that 900 hours, 50 hours were abnormal loss unproductive. How much were 50 hours? They were abnormal loss because they were unproductive. If they were productive, it is not termed as loss. And they were normal or abnormal? Abnormal. Normal will be always taken care by standard because CEO knows that there is a normal loss in this particular process or in this particular department. But it was abnormal loss which is unproductive. Will you have to pay for this 50 hours to your workers? Yes. Will your production happen at that point of time? No, because it is a loss. Then here, instead of 900, I will be taking only how many hours? 850. Sir, we have paid for 900 hours. Agreed. So only here we have written actual hours 900. Actual hours for which the laborers are paid is 900. So actual hours I'll be writing down 900. What is net actual hours? It is actual hours minus abnormal. Can you help me out? 850 into 20. It is 17,000. Help me out. 17,000 minus 18,000 minus 1,000. minus 1000 will be termed as ideal time variance. Ideal time variance. And the first variance, which will always be negative, it will never be positive. Sir, this was unproductive, but the name of the variance is ideal time variance. During this period, what was the ideal time? Can you tell me? 50 hours? What is the standard rate of the laborer? 20. 1000 rupees you have paid to laborer. But during this period of time, laborer were ideal because of unproductiveness or because of any reason, labor were ideal and it was not a productive payment. Sir, then what? 20,000 minus 17,000 will be termed as, this is positive 3,000. This will be termed as efficiency variance. Sir, how it is efficiency variance? The work which was allowed to be completed in 1000 hours, the workers are actually completing in 850, not even in 900 hours, because 50 are abnormal loss. So they are completing it in 850 hours, which is good. They are saving 150 hours for the company. Sir, they are saving only 100 hours for the company. But that we have considered as a different variance, which is ideal time variance. We are continuing with labor, and we will be making a full-fledged chart whereby mixed variance is also included and ideal time variance is also included. It will go like this: standard hours into standard rate, revised net actual hours into standard rate. What is revised net actual hours? Net actual hours in standard ratio. Not actual hours in standard ratio, but net actual hours in standard ratio. Net actual hours into standard rate. Actual hours into standard rate. Actual hours into actual rate. This is labor sub-efficiency variance. This minus this will be labor mix variance. Total of this will be labor efficiency variance. This minus this will be ideal time variance. This minus this will be labor rate variance. And total of this three will be labor. This is just merger of chart number 1 and chart number 2. Labor sub-efficiency and labor mix variance. Today we did it in chart number 1. Ideal time variance we did it in chart number 2. This is just combination. When a full-fledged question of labor is asked and you want to solve that full-fledged question, you will have to prepare this all variances. We are going to see 13.4, where we will be learning something about labor. Please understand, still standard for standard and standard for actual concept will remain same. A company planned to produce 2000 units of a product. Can you tell me 2000 units is what? Input or output? It is output. And it is a standard output. I am writing it in standard output, which is how many units? 2000 units. In a 40 hours, in a week of 40 hours, by employing 65 skilled worker. Which worker will be working? Skilled worker. For how many hours it is planned? 40 hours into 65 workers. Can you tell me how many hours is planned? 40 into 65? 2600 hours. Other relevant information are as under. Standard wage rate will be 45 per hour. Rate will be 45 per hour. Total, not important, but I am finding it out. It is 2600 into 45, which is 1,17,000. So what was planned? Try to understand. 2000 units we will be manufacturing by employing workers of 2600 hours at a rate of rupees 45. So our total cost of manufacturing 2000 units will be 1,17,000. Thus I am just writing in a table format whatever is given in the question. Actual production is 1800 units. So actual cost for actual output, which is only 1800 units. Actual number of workers employed were 50 workers in a week of 40 hours. So I am finding out actual hours will be 50 into 40. Agreed? (2000 hours). Again, they are of skilled worker. Actual wage rate is rupees 50 per hour. Rate is rupees 50. So total you have paid for 2000 hours at the rate of 50, which is 1 lakh rupees. So this will be total which you have paid. Abnormal time loss due to machinery breakdown is 100 hours. Can I say it is abnormal loss of how many hours? 100 hours. So this is what student make mistake. Sir, if 100 hours are abnormal, I should reduce it from here. Sir, actual hours will become 1900 hours. Will you be paying for this 100 hours? Yes or no? Once you deduct it over here, your total wage cost will be incorrect. Because then you will be calculating 1900 into 50 rupees, which is not actual wage payment, right? Which is not actual wage payment. What do you do with abnormal? You will have to pay to workers and transfer it to costing P&L account. This is an costing treatment or accounting treatment of abnormal. So I will be dealing with abnormal variance but separately. My actual hours are still how many hours? 2000 hours, right? Now it is very easy. Prepare a chart. Compare this to. Answer is no. Why we cannot compare these two charts? Can you tell me? One is for 2000 units and one chart is for 80. You can never compare a cost which is of 2000 units with a cost which is actually of 1800 units. See, when the figures are like this, 2000 and 1800, you will be inclined to compare it. But you should understand, suppose if this was for 1 unit, then you logically understand it. These two charts cannot be compared. So what we need to find out, can you tell me what we need to find out then? Standard cost for actual output, which is how many units? 1800 units. Can you tell me what was the standard hours for 2000 units? What was hours required for 2000 units? Standard only, 2600 hours. Then what will be hours required for 1800 units? It feels comfortable because this is the same thing that we have done in material, right? Material also we were doing same thing, just instead of hours it was cages. So how many hours are available? 2340 hours. It is a still skilled labor. Hours will be 2340. Standard rate will be 45. Why standard rate is remaining 45? Will not be able to change it. 45 is for 2000 units. Then for 1800 it is how much? You should not do it. Why? 45 is for per hour. So it will not change. And 2340 into 45. 3 rupees total. What is the 2340 hours? What is the logical meaning of 2340 hours? Standard hours available to manufacture 1800 units, right? Not 2000 units, because I don't want to compare the cost of 2000 units. Now can this two be compared? Yes, you can prepare a chart, compare this two, you will be getting the answer. Yes. Can I find out ideal time variance? Yes, in this case, yes, because there is an abnormal hours. Sir, can't we find out mix variance? Can you find out mix variance? You cannot. Mix variance can be found out when there is raw material A, raw material B. So when there is skilled labor and unskilled labor, then there will be a mix variance. So I will be finding out this manner. Standard quantity, standard hours into standard rate, net actual hours into standard rate, actual hours into standard rate, actual hours into actual rate. Standard hours is 2340 multiplied by 45. Actual hours are 2000 into 50. This is 1 lakh rupees. 1,05,300. Everything was for skilled labor. Actual hours are 2000 multiplied by standard rate is 45. This will be 90,000. I want a net actual hours, which we have not found out. What are actual hours? What are actual hours? 2000. What is abnormal loss? Actual hours are 2000 or 2340? 2000, right? It is not 2600. 2600 are standard hours for standard output, which is now useless. Before we were putting a cross also on it. Minus abnormal hours are 100. So net actual hours are 1900. 1900 into 40. 2340. It is 1900 multiplied by 45. 85,500. This minus this will be efficiency variance. This minus this will be idle time variance. This minus this will be labor rate variance. This is minus 10,000. This is minus 4,500. and this is plus 1,05,300 minus 85,500, 19,800. The total of this three will be positive 5,000. This is nothing but labor cost variance. Next is 13.5. Standard labor employment and the actual labor engaged in 40 hours week for a job are as under. So everything is for one job only. Standard skilled 65 workers, wage rate 45 per hour. 65 workers will be working for how many hours? 40 hours. We are talking about a week. Semi skilled 20 and unskilled laborers are 15. Standard output is 2000 units. So all this is for how many units? 2000 units. Actual output is 1800 units, and this is actual number of workers employed for 40 hours a week. Wage rate are as follows. Calculate the labor cost variance. Ideal time variance I will not be able to find out because there is no abnormal loss given in the question. Can I find out labor mix variance? Yes, I can easily find out labor mix variance. But before that, I will have to form a base or chart table to compare what are standard hours and what are actual hours. First, always do standard. Standard is for how many units? 2000 units. Write it down properly so that we get an idea what we are actually calculating. For 2000 units, you need to hire three types of laborer: skilled, semi-skilled and unskilled. Skilled, semi-skilled and unskilled. How many skilled labor you should hire? 65 laborers for 40 hours a week. I am calculating everything for a week. So 65 into 40 will be your number of hours. 65 into 40. Can you help me out? 2600. Semi-skilled 20 workers into 40 hours. 20 workers into 40 hours is 800 hours. And 15 workers into 40 hours will be 600 hours. Do you understand this? Standard says to manufacture 2000 units, you need 2600 skilled hours, 800 semi-skilled hours and 600 unskilled hours for this 2000 units. What is the rate? 45, 30 and 15. 45, 30 and 50. Now see, since last 3-4 sums, we know that this total is not important. I am not finding it out, right? It is useless to just do the total and keep it as it is. These two things will be important. Actual output is 1800 units. And actually you have employed skilled, semi-skilled and unskilled worker. How many workers? 50, 30, 20. 50, 30, 20 who will be working for 40 hours a week. So 2000 hours 1200 hours and 800 hours. 2000, 1200 and 800 hours. These are actual hours. What is the actual rate paid to them? 50, 35 and 10. 50, 35 and 10. Can we compare these two charts? Yes or no? No. Why? Because this is for actual cost of manufacturing 1800 units and this is actual cost of manufacturing 2000 units. So this cannot be compared. We will find out standard cost for actual output, which is 1800 units. Hours, rate, rupees, skilled, semi-skilled, unskilled. Alright, see, it is very simple cross multiplication. For 2000 units, 2600 hours are required. Then for 1800 units, how many skilled are required? So what we do? 2600 into 1800 divided by 2000. 2600 into 1800 divided by 2000, which is 2340. Same cross multiplication is to be done for semi-skilled and unskilled. 800 into 1800 divided by 2000. 720. 600 into 1800 divided by 2000, which is 540. Labor rate standard will remain same because it is not for 2000 units, it is per hour. I can total out this because this is one of the column in my book, so I can do this. Sir, which type of chart I will prepare? Please concentrate. This is the chart I will prepare. I will not prepare net actual hours. I will not be getting ideal time variance because there is no ideal time, right? Will I get mixed variance? Yes. Then I do this. Standard hours into standard rate. Revised actual hours into standard rate. Actual hours into standard rate, actual hours into. Please concentrate before filling up the chart. I am finding out revised actual hours. You should take actual hours. We have not done total. You should do total of actual hours. This is 4000 hours. Agreed? So actual hours, the total are 4000 hours. Skilled, semi-skilled and unskilled workers. The hours will be distributed in the ratio of standard hours. Actual hours in standard ratio. And believe me, this ratio is a 65:20:15. It will be this. Or you can distribute it in this ratio. 2340:720:540. 2340:720. 2340 plus 720 plus 540. It is 3600. What will be revised actual hours for skilled? 4000 into 2340 divided by 3600. 2600. 4000 into 720 divided by 3600, which is 800. 4000 into 540 divided by 3600, which is 600. What is this? Revised actual hours. If the actual hours are 4000, then skilled worker should be 2600 hours, semi-skilled should be 800 hours, and unskilled should be 600 hours as per standard ratio. I will be preparing this chart. I am having each and every idea. This I will be comparing this two charts and not this two charts. This chart is not important now. We will be comparing just these two charts. You'll have to do it fast because I am having Excel sheet. Standard hours for skilled is 2340. Semi-skilled is 720. Unskilled is 540. Standard rate is 45, 30, and 15. Actual hours are 2000, 1200, and 800. 2000, 1200, 800. Actual rate is 50, 35, 10. 50, 35, and 10. Revised actual hours I have already found out, which is 2600, 800, and 600. I have done the same chart in Excel sheet. You will not be able to cope up along with me. Just try to concentrate over here how we have found out. This is standard hours into standard rate. This is total. Then it is revised actual hours into standard rate. This is total. Actual hours into standard rate. This is total. Actual hours into actual rate, and it is total. So this minus this is labor sub efficiency variance. Labor sub efficiency variance. So how I have found out 11,700? Try to understand. Here I have not found out total labor sub efficiency variance. I have found out sub efficiency variance of skilled laborer also, unskilled laborer also, semi-skilled laborer also, and total also. How this 11,700 came? Please try to concentrate. This 11,700 is 1,05,300 minus 1,17,000, that is 11,700. 21,600 minus 24,000 is 2,400. 8,100 minus 9,000 is minus 900. And what is the total? 1,35,000 minus 1,50,000, which is nothing but negative 15,000. Till this point of time, we were finding out only this answer, right? Which is not practically correct, because in examination you will have to show what is labor sub efficiency variance of even skilled laborer, right? Labor mix variance is this figure minus this figure. 1,17,000 minus 90,000 is 27,000. 24,000 minus 36,000 is minus 12,000. And 9,000 minus 12,000 is minus 3,000. Total will be 12,000. That is 1,50,000 minus 1,38,000 will be labor mix variance. Total of labor sub efficiency and labor mix variance is labor efficiency variance. Labor efficiency variance is total of this two. This is labor efficiency variance is minus 11,700 minus plus 27,000, 15,300 minus 2,400 minus 12,000 is minus 14,400 minus 900 minus 3,000 is minus 3,900 and minus 15,000 plus 12,000 is minus 3,000. Labor rate variance is very simple. It is this minus this for all three particulars point and even total point. It is minus 12,000. And total labor cost variance is labor efficiency variance plus labor rate variance. So now in your examination or even while you are doing the question, if you are not having Excel sheet, it is really an art to adjust all this variances in A4 size one paper, right? Because the point at which you turn your paper, it is very difficult to solve this type of, so you will have to adjust it in one paper. Now it is correct. It is minus 15,000. So total labor cost variance is just total of this two. We will be going to variable overhead variance. Now please understand, even if this is not a direct cost, why it will be very similar to direct material and direct labor? Because direct material is also variable cost, direct labor is also variable cost, and variable overhead is also a variable cost. There will be problem in fixed overhead, but as far as variable overhead is concerned, this is how I will be finding out my answer. Standard hours into standard rate. And which is the standard hours? It might be machine hours, it might be labor hours, multiplied by standard rate. This is your absorption rate, right? This is nothing but your absorption rate. Actual hours into standard rate, actual variable overhead. Actual variable overhead is nothing but actual hours into actual rate. This minus this will be efficiency variance. This minus this will be expenditure variance. Total of this two is variable overhead cost variance. Sir, this is exactly same as labor. The answer is yes. Instead of if we take labor hours instead of standard machine hours, it is absolutely same as labor. There is no difference in variable overhead variance and labor variance. We also sometimes find out variable overhead variance, standard hours into standard rate, net actual hours into standard rate, actual hours into standard rate, and actual variable overhead, which is nothing but actual hours into actual rate. This we term it as efficiency variance, variable overhead efficiency variance. This is termed as variable overhead ideal time variance, and this is termed as expenditure variance. Total of this three is termed as variable overhead cost variance. This is again same as labor. We were doing this even in labor, idle time variance. We'll be taking one question and try to understand variable overhead variance. The following data is given. Calculate variable overhead variances. All of you are ready? The budget is same as standard. Budgeted production is 400 units. Man hours to produce the output, this is labor hours, is 8,000 hours. And variable overhead budgeted is 10,000 rupees. Alright. Try to understand, I am finding out one standard rate. I am finding out standard rate. And standard rate can be easily found out from this figures, which is budget. What is a total variable cost budgeted? 10,000 rupees. How many units were budgeted? 400 units. What is the answer? 10,000 divided by 400? 25 rupees per what? Per unit. So what is this? We have learned it. This might be absorption per unit. It is which rate? Absorption rate. Variable overhead absorption rate, and it is based upon per unit. All right. Can you tell me this? Rupees 10,000 divided by 8,000 hours or labor hours. What is the answer? 1.25 rupees per unit per. This is also one type of absorption rate. This is also one type of absorption rate. That it is forecasted that you will have to pay 1.25 rupees per hour. How to find out variable overhead? Please try to concentrate. Variable overhead, I will be drawing this chart, standard hours into standard rate, actual hours into standard rate, and actual variable overhead. Standard hours are 8,000 hours. The answer is no. Why not? The standard hours are 8,000 hours. It is given over here. What is this? 8,000 hours. It is given. Standard is 8,000 hours. But it is for how many units of output? 400. Actually 400 units are manufactured or not? How many units are actually manufactured? It is only 360 units. What is actual data for 360 units? Let me find out. Actual data in hours for 360 units are 7,000 hours at a total cost of 915. So rate I can easily find out, right? This will be the actual rate. Will I have to find out this? Yes. Standard cost for actual output. What is actual output? 360 units. Can you find out hours over here? If 8,000 hours are required for 400 units, then for 360 units, how many hours will be required? It will be 8,000 into 360 divided by 400. Will be 7,200 hours. Standard rate is going to remain same. Standard rate per hour is 1.25. 7,200 into 1.25. Do you understand? There's a standard rate per hour. 7,200 into 1.25. Standard hours. I cannot take 8,000 hours. I'll have to take 7,200 hours. Into standard rate per hour. 1.25 is equal to 9,000 rupees. Actual hours are 7,000 into standard rate 1.25. Which is 8750. Actual variable overhead, you can directly take this 9150. This minus this is variable overhead efficiency variance, and this minus this is variable overhead expenditure variance. Total of this two is variable overhead cost variance. This will be positive 250. This is negative 350. No. Negative 400. This will be negative. Correct. Please try to concentrate this. We are comparing 9,000 and 9150 ultimately. Tell me first, why we can't compare this two? 10,000 is for 400 units and 9150 is for 360 units. What if this 10,000 is for 400 units? Find out this. How much will be for 360 units? 10,000 into 360 divided by 400. Can you tell me 10,000 into 360 divided by 400? It is 9,000 and 9150. This you can compare. Why? This I have converted it for 360 units. This is for 360 units. So this can be compared. That is actually compared. All right. And this is just division of efficiency variance and expenditure variance. Can anyone explain me 8750? Only this 8750. Taking into base actual hours, you should have expended 8750 rupees. What is actual hours you have worked? 7,000. What is the standard rate per hour of expenditure? 1.25. Then 7,000 into 1.25, 8750 is the expenditure which you should be doing if you are actually working for 7,000 hours. What is the actual expenditure you are doing? 9150, which will be is equal to 7,000 multiplied by something, right? Actual hours is 7,000 multiplied by something. So you are doing more expenditure or less expenditure? You are doing more expenditure. I can even tell you this rate. It is 9150 divided by 7,000. It is 1.30. So you are actually expending at 1.30 rate. So your expenditure per hour is higher. So only this is termed as variable overhead expenditure variance. Please concentrate. Now I am going to explain you something which is somewhat weird. This 9,000 rupees I could have found out even by this formula. Please concentrate. Actual output into standard rate. What is actual output? Can you help me out? Actual output. 360 units multiplied by standard rate 1.25. No, you are making a mathematical mistake. 360 units cannot be multiplied with 1.25 rupees per hour. It should be multiplied by standard rate per unit. Have we found out standard rate per unit? Yes. What is standard rate per unit? 25. Actual output into standard rate, which is 25. Can you help me out? 360 into 25. 9,000 rupees. The standard hours into standard rate can also be found out by actual output into standard rate. Where this is helpful, it is helpful to understand things logically. What is 9,000? Can anyone tell me? What is 9,000 rupees? To manufacture 360 units. So what was standard rate for manufacturing one unit? 25 rupees. So 25 into 360 should be the same answer, right? Actual hours into standard rate can be termed as a standard output into standard rate. It should be 8750. What is the standard output is a 400 units into standard rate per unit is 25. This will not be equal to 8750. Right? Why understand? Still you don't get how to compare the things. Your standard output should not be for standard hours. It should be for actual hours. How to calculate standard output? I'll tell you. How many? I'm talking about standard output. If you work for 8,000 hours, what should be your standard output? 400 units. If you work for 7,000 hours, what should be your standard output? It is 350. What is the standard output? 350 units. What is 400 units? Can anyone tell me? Standard if you are working for 8,000 hours. If you are working for 7,000 hours, you should have manufactured 350 units. You are actually manufacturing 360 units. Your efficiency is the 360 divided by 350 multiplied by 100. Remember which chapter? Labor. In labor, you were doing this. You were finding out what should be the standard output for actual hours. At that time, I told you this will be more clear when we do standard costing. 350 units is a standard output. Can you do this? 350 into 25 will be equal to 8750. So this is standard output for actual hours. Standard output for actual hours. Actual variable overhead is nothing but actual hours into actual rate. But those are two good points which should be understood logically. Even if it is not understood, normally variable overhead we can easily solve it. We are going to next concept, which is fixed overhead variance. We start with standard hours into standard rate. Then actual hours into standard rate. Predicted fixed overhead, budgeted fixed overhead, and actual fixed overhead. This minus this is nothing but efficiency variance. This minus this is capacity variance. This minus this will be calendar variance. Total of this three is volume variance. This minus this will be expenditure variance. And this plus this will be fixed overhead cost variance. I will be practically taking a question and will explain you all the variances in detail. Question is C 13.7. A manufacturing concern has provided the following information related to fixed overhead. Standard is given. Yes. Output in a month will be 5,000 units. Working day in a month will be 25 days. And fixed overhead will be 5 lakh rupees. I am going to find out standard rate per unit, which is 5 lakh rupees divided by 5000 units. What is the output? It is 100 rupees per. Working days in a month was 25. Now actually you have worked only 23 days. Fixed overhead was 5 lakhs and actual fixed overhead incurred is 4 lakh 90,000. Compute fixed overhead variances, fixed overhead expenditure variance, fixed overhead volume variance, fixed overhead efficiency variance. Please try to concentrate. First answer which we want is standard hours into standard rate. Here hours are given or not given? Not given. Hours are given or not given? Not given. If they are not given, instead of standard hours into standard rate, I will be doing actual output into standard rate. And this we have learned in variable overhead cost area. Standard hours into standard rate, the answer will come as actual output into standard rate. Actual output into standard rate. Actual output is how many units? 4,800 units. What is the standard rate per unit? Rupees 100. This will be rupees 48,000. For better understanding, let us convert this into number of hours also, right? So what is number of hours in standard? It is not given. Number of hours in actual given or not given? Not given. Let us assume that we are working 8 hours a day. So standard is also for 8 hours a day and actual is also for 8 hours a day. Can you find out hours? Standard as well as actual. Standard hours as well as actual. Standard hours will be 25 days multiplied by 8. 200 hours. And this will be 23 days multiplied by 8. 184 hours. So that everything is logically understood, right? What will be standard rate per hour? Now I am finding out this also. Standard rate per hour will be rupees 5 lakhs divided by 200 hours. It is 2500 rupees per hour. Sir, so this was incorrect? No. You can find it out by hours method also. What are standard hours? Standard hours are 200. Yes or no? Try it out. 200 into 2500. It is not 4,80,000. This is 4,80,000, right? It is not 48,000. You are getting 5 lakhs. Still you are making mistake? Yes. This is the standard hours for standard output. You need to find out standard hours for actual output. Standard hours is 200 hours for 5,000 units. What will be for 4,800 units? 4,800 into 200 divided by 5,000. 192 is the standard hour. Standard hours can never be termed as 200, right? For comparison, 200 hours are not important. 192 are standard hours. I can find out this 4,80,000 in this manner also. It is the standard hours, 192 hours multiplied by standard rate per hour is 25,000 rupees per hour. What is the answer? 4,80,000. When I say standard hours into standard rate will be is equal to actual output into standard rate per unit, the answer should remain same. It is remaining same. Actual hours into standard rate. Now actual hours are always for actual units. 184 hours into 4,800, 184 into 2,500. It is how much? 4 lakh. All right. Sir, can we find out by another method this rupees 4,60,000? The answer is yes. We found out by 4,60,000. We can find it out by another method also. It is the standard output into standard rate per unit. What is standard rate per unit? Rupees 100. What is the standard output? Please try to concentrate. I can do it in this manner. Standard output for actual hours. So 5,000 units is for 200 hours. Then how many units will be for 184 hours? It is 5,000 is for 200. 5,000 into 184 divided by 200. 4,600 multiplied by 100. It is 4,60,000. So it can be standard output into standard rate per unit. All right. How to find out? First, how to find out budgeted fixed overhead. This is budgeted fixed overhead. It is how much? 5 lakhs rupees. Budgeted fixed overhead is how much? 5 lakhs rupees. What is preferred fixed overhead or P fixed overhead is nothing but budgeted fixed overhead multiplied by actual days upon standard days. So if actual days and standard days are same, it will remain same. Otherwise, budgeted fixed overhead and preferred fixed overhead will be different. Will it, is it 4,60,000? Should be 4,60,000 rupees.
Yes, 4 lakh.
It is 5 lakhs into 23 divided by 25. And actual fixed overhead is rupees 4 lakh 90,000. This is 4 lakh. 4,80,000 minus 5 lakh is minus 20,000. 4,80,000 minus 4,60,000 is plus 20,000. 4,60,000 minus 4,60,000 is plus 0. And 4,60,000 minus 5 lakh is minus 40,000. Five lakh minus 4,90,000 will be plus 10,000. Fixed overhead cost variance is minus fixed overhead cost variance is somewhat typical to understand. Please try to concentrate over here. In any of the variance, we do not take this figure into consideration. What is 5 lakhs rupees? It is the standard cost for standard output. Agreed? Standard cost for standard. What is 5 lakhs rupees? This is standard cost for. In any of the chart, have we compared standard cost for standard output? No. Which two charts we have compared? Standard cost for actual output and actual cost for. We never compare standard cost for standard output. Why we are comparing then this figure with any of the figure, but why we are comparing 5 lakhs rupees? Please try to concentrate. If standard cost for standard output, what is standard output? 5,000 units. If standard cost for 5,000 units is 5 lakhs rupees, then standard cost for 4,800 units will also be 5,000 units. Or will also be 5 lakhs rupees. Standard cost for 5,000 units is 5 lakhs rupees. Then standard cost for 4,800 units will also be 5 lakhs rupees. Why not to do cross multiplication? Because it is fixed overhead. Fixed overhead does not change with number of units. So in fixed overhead, you can take this 5 lakhs rupees. What was budgeted overhead? 5 lakhs. What is actual overhead? 4,90,000. How much expenditure you have done less? 10,000. See what is written over here. Positive 10,000 is expenditure variance. As compared to your total expenditure, which was forecasted at 5 lakh, you have done an actual expenditure of 4,90,000. What does it mean? You, because of Corona, your office might be vacant for 10 days. And you might have told to your landlord that we will pay 10,000 rupees less this month. So your actual fixed expenditure is lowered by how much rupees? 10,000. In standard, they have taken that 10,000 rupees into consideration. Here you have not taken. Here we have not taken 10,000 rupees into consideration because it is saved. So actual expenditure variance is favorable, means it is saved by how much rupees? 10,000 rupees. What is budgeted fixed overhead? 5 lakhs. See, whenever budget was made, it was made for 5,000 units. All right. What is actual output? 4,800. And what is the standard rate per unit? 100 per unit. It is 100. So what should have been forecasted in your actual standard was rupees 4,80,000. If you were knowing that 4,800 units was to be manufactured and the rate is 100, absorption rate is 100 unit per 100 rupees per unit, then you would have forecasted 4,80,000. But you have actually forecasted based upon 5,000 units. 4,80,000 should be your forecast. 5 lakhs rupees is your actual forecast because of number of units. What is the negative figure? 20,000. Negative 20,000. See the name of the variance. It is fixed overhead volume variance. It is fixed overhead volume variance. Please try to understand why volume variance is coming negative. Suppose you were going to output say 10,000 units and your total fixed cost was say rupees 1 lakh. What would be fixed cost per unit? It is rupees 10. Alright. So per unit you are going to incur how many rupees? 10 rupees. Let us understand expenditure variance as 0. So how much you have actually incurred? Rupees 1 lakh. So expenditure was forecasted as 1 lakh. It is actual at, but sir, it is not dependent on number of units. Agreed. It is not dependent on number of units. But you have actually manufactured only 8,000 units. Actually manufactured only 8,000. See, in this office, which is on a rented office, what is the rent? Rupees 1 lakh. What was the forecasted rent? 1 lakh. What you expected? How many units you will manufacture? 10,000. You are manufacturing only 8,000 units. Can you tell me cost per unit? Because ultimately your selling price will be determined based upon cost per unit, right? So what is cost per unit? Is it 10 or it is more than 10? What is more than 10? 12.5. Will it make adverse effect to your profit? Yes, it will make adverse effect to your profit, or it will increase your cost. It will increase your per unit cost, and this is the cost which we want to determine. Correct. Why the cost has increased per unit by 2.5 rupees? Can you tell me? Because of volume. So if volume decreases, the fixed overhead, sir, total is going to remain same. Agreed. But per unit it is going to increase if you manufacture less number of units. As you have manufactured less number of units, your volume variance is negative. See, you might have actually manufactured less. Huh? What was forecasted? 5,000. What is actually manufactured? 4,800. Because your volume has decreased, sir, my total fixed cost is going to remain same. Agreed. But it will affect on your per unit cost, and so it is coming as negative. As which variance? Volume variance. Now we are finding out volume variance reasons. First is efficiency variance. Concentrate. What is efficiency variance? What is 184 hours? Can you tell me what is actually 180? What is 184 hours? They are actual hours. This is standard rate per hour, right? I could have found out this by standard hours into standard rate. What is standard rate? 2,500. What was the standard hours for? It is 192. Please concentrate. To manufacture 4,800 units, the standard hours required were 192 by our laborer. In how many hours they are actually manufacturing? 184. So it is good. 4,800 units were to be manufactured in how many hours? But they are manufacturing in 184 hours. So they are efficient or not efficient? Now all the expenditures you will have to do it on how many hours? 184 hours. So we cannot question about the efficiency of the labor hours. So the efficiency variance is coming to how much? Positive 20,000. Stall. Forget about capacity variance right now. Why it is coming as 0, that also I'll tell you. Budget, what is this? Calendar variance. It is how much? Negative. See, what does this mean? In this month, you are expected to work for how many days? 25. You are actually working for how many days? 23. So because of this, your output has decreased. Because of this, your output has decreased. Let us take our same example. This was rent of the office. What was expected units? 10,000 units. What are actual units? 8,000 units. This is volume. Why the volume has decreased? It is possible because of efficiency of workers. The workers who are working in this office, they might be less efficient this month, so they have produced 2,000 units less. What is the other reason? Strike? Is it all right? Say they are working in good efficiency or 100% efficiency, but instead of 25 days, they work for 23 days. So what is another reason for volume variance is calendar. Do you understand difference between these two? See here in this question only. What is efficiency variance? Plus 20,000. That means workers are working greater than 100% efficiency. What is calendar variance? Negative. What does it mean? You are working less number of days as expected. As expected. Expected by 25 days, you are working for 23 days. So your volume has decreased, and so there is a volume variance which is negative. The main reason is calendar variance. What is capacity variance? I will tell you this. This is practically like ideal time variance. The worker's capacity is good. How many hours? Say 8 hours. They work productively per day for how many hours? 8 hours. Yes, you are giving them only 23 days. That is your fault. Instead of 25 days. But this will be resulting into which variance? Calendar variance. Alright. Let us assume they are working at 100% efficiency. Believe me, if they are working at 100% efficiency, this variance would be 0. If they are working for 25 days, this variance would be 0. Is it alright? Then what is this? I will tell you. It is 8 hours work, but because of some reason, there was abnormal loss of 1 hour. So actually, how many hours they are working? 7 hours at 100% capacity. So their capacity variance should not come negative, right? They are working for 25 days or 23 days, say 25 days. So their calendar variance should also be 0. But the capacity from 8 hours has reduced to 7 hours. Sir, it is not efficiency variance. What do you think? It is not efficiency variance. Instead of 8 hours, they are working for 7 hours. That is not efficiency, right? Why they are working for 7 hours? I'll also tell you the reason. Raw materials were not available. Right? Machine went into repair. They are unproductive, abnormal loss, which might be because of worker, which might be because of factory. See, what is the efficiency? In 1 hour, I was able to manufacture this 100% capacity. I manufacture it in half hour. Then that is my efficiency, right? If in 2 hours, how many pens I need to manufacture? 2 pens. 1 hour was abnormal loss. 1 hour was abnormal loss. Then how many pen I should manufacture? 1. I am actually manufacturing 1. Then I am working at 100% efficiency. But the capacity of this office has decreased because of some reason. Which reason? Abnormal reason. Which is not decreased in this case. So the capacity variance is coming to how much? 0. Believe me, it has not decreased. All right. How? How many hours are expected to be worked in a day? 8. How many actual days you are working? 23. Multiplied by 8. 184. You are, the worker is actually working for how many hours? 184 hours. So there is no abnormal loss which is coming into picture as far as number of hours is concerned. So the capacity variance is 0. And all this three in total is which variance? Volume variance. This is expenditure variance, and total is a fixed overhead cost variance. Believe me, fixed overhead normally should be compared between this and this. What was fixed overhead expected? 5 lakhs. What is actual fixed overhead? 4 lakh 90. Sir, fixed overhead is not dependent upon number of unit produced. When we do marginal costing, we assume this? Yes. So, we should find out plus 10,000 and then end. Believe me, then your analysis of fixed overhead will not be good. Fixed overhead is not dependent upon number of unit manufactured. Agreed. But fixed overhead per unit will be affected by number of units manufactured. And you are the CEO of the company. You want to know why your fixed cost per unit has increased. It might have increased because of volume. So only expenditure variance in fixed overhead is not important. Volume variance is also important. For incurring the same fixed cost, 5 lakh or 4 lakh 90,000, instead of manufacturing 5,000 units, you are manufacturing 4,800. Will it affect your total fixed cost? No. But will affect your per unit fixed cost? Yes. Will it affect your per unit selling price? Yes. Will it affect your per unit profit? Yes. Then that is the things where the CEO is interested in, right? So he will not only analyze expenditure variance, he will also analyze volume variance. All right. See, otherwise, what if only expenditure variance is analyzed? See, CEO will come into place and he will see your expenditure variance is positive 10,000. He will ask you what you did. You will say that I have waived off a rent of rupees 10,000. Rent is a fixed cost. So I have waived off a rent of rupees 10,000. He will be very happy, go back to his company, and he will be very happy with the department or wherever the manufacturing, the variances you are finding it out, right? What is the answer? Plus 10,000. Actually, this department is increasing the cost per unit or decreasing the cost per unit? It is increasing the cost per unit. Even if they have reduced total fixed overhead, instead of manufacturing 5,000 units, they are manufacturing 4,800 units. Sir, where this will come? This will come in which variance? Volume variance. In this case, what is the volume variance? Minus 20,000. What can be reason of the volume variance? Now think logically. What can be reason of volume variance? Instead of 25 days, you are working for 23 days, calendar variance. The worker's efficiency has decreased. Instead of manufacturing it in 1 hour, he is manufacturing in 1.5 hours. So your total volume will decrease. What might be the third reason? Abnormal unproductive hours might be the third reason. And it will be which variance? Capacity variance. And what is the total of all these three capacity variance? Negative 2,000, 20,000. See, now you are a CEO of a company. You know this. Here there is a benefit. Here there is a benefit or there is a loss? There is a loss. All right. You will fire to all your workers. That you go out of the company. You are not capable. Say this answer is in crores. You are not a good analyst. You should analyze each and every variance. Workers are working efficiently or not? Yes. See this variance. Efficiency variance is positive or negative? Means workers are working more than the 100% capacity. You will see capacity variance is how much? 0. So you will understand there is no abnormal loss of number of hours, time. Which variance is negative? Calendar variance. What does it mean? You are working for less number of days. Now the strike was done by because of some other reason. Say there was some political thing going on in the city and all the factories were closed. So our factory was also closed for how many more days? Is it a fault of a worker? No. What CEO will say, okay, this was unavoidable, so there is a negative variance of 20,000. Workers should be given bonus because their efficiency is higher than 100%. This 2 days, we will try that we will not be having strike in next month, so it will be streamlined. And expenditure variance is already positive, so the department or the company or the branch is trying to reduce the overall expenditure, right? So this is how the analysis will be useful once this chart is available to the head of the department or head of the company. This is nothing but fixed overhead variance. Let us just revise fixed overhead variance. How will we be finding out fixed overhead variance? Standard hours into standard rate per hour. Give me the option. Actual output into standard rate per unit. Second will be actual hours into standard rate per. Give me the option. Standard output for actual hours. Always remember, don't write down directly standard output. Multiplied by standard rate per unit. Preferred fixed overhead. How I will find out? Budgeted fixed overhead into actual days upon. Can this be positive? Yes, if the standard days are 25 and actual days are 26. All right, then it will be positive. And your volume variance will increase because you are working more number of days for the fixed cost. Then it will be budgeted fixed overhead, that is standard cost, actual fixed overhead. This is, help me out, efficiency variance, capacity variance, calendar variance, and expenditure variance. Total of this three is volume variance, this is expenditure variance, and this will be fixed overhead. We are going to first revise fixed overhead variance and then we will be going ahead. How we find out fixed overhead variance? Variance is standard hours into standard rate per hour or actual output into standard rate per output. Second column will be standard output multiplied by standard rate per unit. What is the standard output is not decided by the management. Standard output is a standard output for actual hours. For actual hours, if you are working, what will be your output? That is standard output. And believe me, this standard output we were finding out in the chapter of labor also. There it was given unit to be manufactured or standard units will be 4,000 units. But actual hours work might be different, and then we are finding out the standard output for actual hours and then comparing it with actual output to find out our efficiency, right? There was formula, if efficiency is less than 83.33%, less than 100%, greater than 100%. There we were finding out efficiency by this method. Standard output for actual hours divided by actual output, and I was getting the efficiency. It was efficiency actual output divided by standard output or actual hours into standard rate per hour. The answer in numerical or figure will be same. Preferred fixed overhead is budgeted fixed overhead, just adjusted by number of days, multiplied by actual days divided by standard days, budgeted fixed overhead and actual fixed overhead. This we know. Total is volume variance. If volume decreases of actual manufacturing as compared to standard, then fixed cost per unit will be increased and it will adversely affect our costing. So we are finding out this variance, which is volume variance. And this will be expenditure variance. This is fixed overhead cost variance. Let us go to 13.8. QS Limited has furnished the following information. Standard overhead absorption rate per unit is 20. This is per unit. standard rate per hour is rupees 4. Budgeted production is 12,000 units. Actual production is 15,560 units. Actual working hours are 74,000 hours. Actual overhead amounted to 2,95,000, out of which 62,500 are fixed. Overhead are based upon following flexible budget. Production 8,000 units, then total overhead is 1,80,000 units. Rupees. Production 10,000 units, this is 2,10,000, and 14,000, 2,70,000. Calculate the following overhead variances on the basis of hours: variable overhead efficiency and expenditure variance, fixed overhead efficiency and capacity variance. These are the variances which I need to find out. Please try to understand this standard overhead absorption rate per unit and standard rate per hour. They are absorption rate for overhead. It is not given it is for fixed overhead or for variable overhead. So it is combined rate. It is which rate? Combined rate. There are 2 times data available. One is for 8,000 units, one is for 10,000 units. The total is 1,80,000 and total is 2,10,000. If number of units are given, total cost is given for 2 time period, can you easily segregate into variable and fixed? Let us first segregate into variable and fixed. This we have learned in flexible budget. Variable and fixed. How to find out? Difference in total cost upon difference in units will give you answer of cost per unit or variable cost per unit. Variable cost per unit. Difference in total cost is the 30,000. Difference in units is 2,000. Will be rupees 15 per unit. We don't know why this data is given, but even if you take that data into consideration, then also your variable cost per unit should come to 15 rupees. All right. What is the second information given? Standard rate per hour. So we can find out even fixed cost from this, right? We have learned this under the heading of segregation of fixed cost and variable cost, right? We can easily find out fixed cost. If the budget is of 8,000, 8,000 multiplied by 15 will be variable cost. 8,000 units multiplied by 15. It is how much? 1,20,000 plus fixed cost should be is equal to total cost. So fixed cost will be 60,000. This is 1,80,000. Please understand this all what we have written is the standard. Right? These are all budget. They are not actual figures. Sir, what is actual figures? This is actual figure. Right? You are actually producing 15,560 units. You are actually working 74,000 hours. Working hours are rupees 74,000. I think there is some mistake. Actual working hours, rupees 74,000. Actual overhead amounted to 2,95,000, out of which 62,500 are fixed. Can you help me out? 2,95,000 minus 62,500. 2,32,500 is variable overhead actual and 62,500 are fixed overhead actual. Also, What is the standard overhead absorption rate? 20? All of you agree? What is the standard overhead absorption rate? It is fixed, variable or total? Total, right? Total is the 20. What is the standard rate per hour? 4. Do you understand? 1 unit will take 5 hours standard. All of you agree with this? If rate per unit is 20, if rate per hour is 4, then number of hours is 5. Right? How will be getting 4 into 5 should be 20. This is the rate per unit. Actual production is 15,560 units. I am directly drawing chart first of variable overhead variance. And they have told us to find out based upon hours. It is absolutely all right. You can do it logically even. Standard hours into standard rate. Actual hours into standard rate. Actual hours into actual rate or actual variable overhead. The correction is 74,000 rupees is not there. It is 74,000 hours. It is correction in question, right? The 74,000 rupees is given in the question. It is actually 74,000 hours. I am directly starting with the answer. What are standard hours? You should take standard hours for actual production, standard hours for standard production. Standard hours for you take standard hours over here for actual production, or you take it for standard production? You take it for actual production, right? Standard hours for which two can be compared and put in the chart? Standard for actual production and actual for actual production. Standard for standard production is never used over here. So what is the standard hours for actual production? Try to understand. I am writing in the bracket. What is actual production? 15,560 units. Units. What is the standard time for manufacturing 1 unit? 5 hours multiplied by 5. What will be the answer in hours? What is that hours? Well, first give me the answer. What is that hours? 77,800 hours is what? Hours available for manufacturing 15,560 units, or it is standard hours, right? In short, it is standard hours. It is a standard hours for actual production. Sir, what we are doing in all previous questions, we were actually preparing that 3 charts, right? Actual production, standard production, but it is not required. It will be too much working for only the small point. Multiplied by standard rate. Standard rate we have already found out. Multiplied by 15. See here where the student make mistake. 15 is per unit or per hour? This is variable, right? It is per unit or per hour? Per unit. These are number of units or number of hours? Number of 15 cannot be multiplied with it. All right. Then, but 15 is standard rate. That I agree. If it is 15 per unit, can't you find it out per hour? Variable cost per hour. 15 divided by 5. That is rupees 3 per multiplied by I'm just doing another working and we'll be just rubbing it out afterwards. I have told you standard hours into standard rate is also equal to actual output into standard rate. What is actual output? 15,560 units. What is the standard rate per unit? 15. Answer will be same. Right? Answer will be always same. You can see how the answer is same. This is actually what we are doing. 15,560 into 50. What is the answer of this? 2,33,000. Actual hours 74,000 hours. It is directly given. Multiplied by variable overhead standard rate, which is 3, which is 2,22,000 rupees. Actual hours into actual rate is not required because we are actually having actual variable overhead, which is 2,32,500. This minus this will be efficiency variance, and this minus this will be expenditure variance. $33,400 minus 22,000, which is 11,400. To 22 minus 32 is 10,500 negative. What is total variable cost variance? Positive. They have not asked this variance, but when we are drawing the chart, we can just complete the chart. They are asking us only efficiency variance and expenditure variance. Please understand, when you are taking standard rate, you should be taking variable overhead because this chart is of variable overhead variance. I am drawing a chart of fixed overhead variance. Standard hours into standard rate. Then we do actual hours into standard rate. Budgeted fixed overhead and actual fixed overhead. Sir, we don't write down PFOH, preferred fixed overhead. When we write down, we should be having calendar variance. What is calendar variance? Budgeted were 25 days, actual were 23 days. Then only there will be calendar variance. Here there will be no calendar variance. Preferred fixed overhead and budgeted fixed overhead will be same. So calendar variance will be 0. I am just ignoring calendar variance. All right. Standard hours, we can copy it from here. 15,560 units into 5. These are standard hours. Let me do it with this in this case. I'll be doing with both. Actual output into standard rate per unit. I need to find out standard fixed overhead per unit. All of you agree this 60,000 is standard fixed overhead? What are standard fixed production? 12,000. Standard fixed cost per unit will be 60,000 rupees divided by units are 12,000. 12,000 units, which is 5 rupees per unit. Help me out, what is actual output? 15,560 units multiplied by standard rate per unit is 5. What is the answer? 77,000. Sir, can't we do standard hours into standard rate? You can easily do. What will be standard rate per hour? Can you tell me if rupees 5 is standard rate per unit, what will be standard rate per hour? 5 divided by 5, that is rupee 1 per. I don't understand this question. We have already got standard rate per unit. Why we are again finding out standard rate per unit? What is 15 rupees? Standard rate per unit, but it is variable cost. What is 5 rupees per unit? Fixed cost. What is total rate per unit? 20 rupees. All right. What is per hour variable cost rate? 3. What is the per hour fixed cost rate? 1. All right. These two things are different. When we are doing a combined question of fixed and variable overhead, there will be 4 rates per unit, per hour for variable and fixed both. All right. I am finding out by hours. What will be standard hours? 15,560 into 5. This is units. This is hours required per unit. And what is rate per unit is 1. Fixed cost per unit is 1. This answer will be also same, 77,800. Sir, should we find out by actual output into standard rate per unit or standard hours into standard rate per unit? It does not matter. The answer is going to remain always same. Actual hours. Actual hours are already given. It is 74,000. Help me out. What I should multiply? 5 or 1? 1. It is rupees 74,000. Budgeted fixed overhead 60,000 rupees. Sir, 60,000 rupees is for standard output. This is the only figure we write down in variance analysis which is of standard output because it is fixed overhead. And actual fixed overhead I think also is directly given. Actual fixed overhead is 62,500. This is expenditure variance, which is negative 2,500 rupees. This is efficiency variance, which is positive 3,800 rupees. This is not a calendar variance, it is capacity variance. Which is negative 6,000. Total of this two is termed as volume variance, which is negative 2,200, and total of this two, which is negative 4,700, is a total fixed overhead variance. Positive 14. Can you help me out? Positive 14 plus 3,800. 17,800 positive minus 2,500. And this minus this is 15,300. 77,800 minus 62,500 should be positive 15,300. We are again going to fixed overhead cost variance, and we know that first two figure gives us efficiency variance, then it is capacity variance, and then it is calendar variance. And the total of all these three is nothing but volume variance. Please understand, these are variances in rupees. These are variances in rupees. You can also find out efficiency in terms of percentage. You can even find out efficiency in terms of percentage, which is termed as efficiency ratio. How it can be found out? Actual output divided by standard output for actual hours. Always remember, standard output is never standard output. Only for two things it is standard output. To find out a standard cost per unit, which is fixed cost, and to find out standard cost per hour, which is fixed cost. Otherwise, the standard output is always for actual hours. So actual output divided by standard output multiplied by 100, I will be getting efficiency ratio. I am giving you some figures, maybe you will recall. My actual output is 110 units. My standard output in my time allowed is 100 units. Multiplied by 100, what is the answer? 110%. We have exactly learned this ratio in which chapter? We have learned it in employee cost. In labor, we were finding out efficiency. We were finding out efficiency by this only. Actual output divided by standard output for actual hours. Efficiency ratio can also be found out by standard hours divided by actual hours multiplied by. So it is possible we have done labor cost say before 10-15 days. You might have forgotten the concept of labor cost, but in labor cost we were also doing the same thing. This standard hours are standard hours or standard hours for actual output? Standard hours for actual output, and this was actual hours for actual output. We were never taking standard hours. We were always taking standard hours for actual output and actual hours for actual output multiplied by 100. This will give me answer of efficiency ratio, and efficiency ratio under this formula and this formula should be same. They are same formula, they are not different formula. Why in hours, standard hours goes up and actual hours comes in denominator, and in output, actual output is in numerator and standard output is in denominator? Is it logical? Output greater is higher efficiency. Hours lower is higher efficiency. So here actual hours is in denominator, because if it is lower, the answer will be greater than 100. Here actual output is in numerator, because if it is greater than standard output, the actual answer will be greater than 100. We are finding out capacity ratio. It is actual hours divided by budgeted hours. Actual hours divided by budgeted hours multiplied by 100. What is budgeted? I have told you budgeted is exactly same as standard. Budgeted is exactly same as standard. So sir, budgeted hours is nothing but standard hours. Believe me, the answer is no. Standard hours are always for actual production. Sir, then what is budgeted hours? Budgeted hours are for standard production. Budgeted hours are for standard production. This is the difference between standard hours and budgeted hours. We will never take standard hours over here. It is budgeted hours. And it can also be found out by standard output divided by budgeted output. It is not same standard output and budgeted output. Standard output is always for actual hours and budgeted output will be for budgeted hours, right? There is a difference between standard and budgeted. Actual hours divided by budgeted hours multiplied by 100 or standard output divided by budgeted output multiplied by 100. We are ignoring right now calendar ratio. There is no formula by which you can find out calendar ratio. We are right now ignoring calendar ratio and we are finding out volume ratio. It is also known as activity ratio. Which is nothing but efficiency ratio multiplied by capacity ratio multiplied by calendar ratio, which right now we have ignored, right? Does it make sense? We have understood fixed overhead variance. Which is the first ratio? Which is the first variance we find out? Efficiency, then capacity, then calendar, and total of this three is volume. So multiplication of these three ratios, when it is ratios instead of addition, it will be multiplication. Multiplication of these three ratios will be treated as a volume ratio, right? What is efficiency ratio in hours? I am taking only in hours. What is efficiency ratio in hours? Standard hours divided by actual hours. What is capacity ratio in hours? Actual hours divided by budgeted hours. I hope you understand. If you don't write down multiplied by 100, it is all right. Can we cancel actual hours and actual hours? Yes. What will be volume ratio? Standard hours divided by budgeted hours. Believe me, standard and budgeted both are standard. What is the difference? Can anyone tell me what is standard hours? Standard hours for actual production. And what is budgeted hours? Standard hours for standard production will be termed as budgeted hours. Let us write it down. This is standard hours for actual production. This is a standard hours for standard production or budgeted production. Sir, we have understood the formula of the ratio, but let us understand the ratio. We will be solving one question and understanding all the ratios: capacity, efficiency, as well as volume. Calculate efficiency and capacity ratio from the following. Budgeted production is 80 units. Actual production is 60 units. Standard time per unit is 8 hours. Actual hours work are 500 hours. What is the standard time per unit? 8 hours. Help me out with this. Number 1, 80 units multiplied by 8 hours per unit. This is 640 hours. What is this? Standard hours for standard production. Standard hours for standard production. In short, what we will be writing down? Budgeted hours. We will not be writing standard hours, right? What is the standard hours for standard production? Budgeted hours. This is nothing but budgeted hours. Help me out with this. 60 units multiplied by standard. What is the standard? 8 hours per unit. This is 480 hours. Can anyone help me out? What is 480 hours? They are standard hours for actual production. So we in short write it down as standard hours. What is 500 hours are actual hours. I am finding out, this is my first question, so I am not solving it from the purpose of examination, I am solving it for the purpose of explanation, right? First, we are finding out all three ratios, efficiency, capacity and volume ratios in form of hours by using hours. Help me out. How to find out efficiency ratio? How to find out efficiency ratio? Standard hours divided by actual hours multiplied by 100. Multiplied by 100 I will be doing. Standard hours are 480. Actual hours are 500. If you are taking more number of hours, you are not working up to 100% of capacity. Multiplied by 100. What is the answer? 96 6%. Let us understand it logically. Please try to concentrate. How many actual hours you have taken? 500. For manufacturing, how many units? For manufacturing, how many units? 60 units. So for manufacturing 60 units, say there is only one laborer, understand. For manufacturing 60 units, how many hours is given to that laborers? 480. How much actually he is taking? 500. This 480 is for 60 or 80 units. This is also for 60. Now see it logically. You are taking 500 hours to manufacture 60 units. How much is allowed to manufacture 60 units? 480. So 480 divided by 500. So you are working at your 96% efficiency. So 96% efficiency ratio. Number 2, capacity ratio. Capacity ratio in hours is actual hours divided by budgeted hours. What are actual hours? 500. Budgeted hours are not 480. 480 are standard hours. Budgeted hours are 640. Multiplied by 100, of course. It is 78.125%. Now understand it logically. Which overhead we are talking right now? Fixed overhead. When you have decided your standards of fixed overhead, how many hours you have calculated? Say we were talking in our example for 1 month. In 1 month, people should be working 640 hours. This was expected. This was expected. How many actual hours are worked? 600. Actual productive hours are worked is because there was only 500 hours which are actually worked. What could be the reason? Can you tell me? Again, the same thing, strike. Because of corona, there was holiday. There was a lockdown. We could not work on that particular day. This is nothing but abnormal laws. Which is happening of how many days, how many hours? 140 hours. Materials were not present on that particular day. Alright. Materials were not present on that particular day. Then 140 hours are lost. You have not worked for that particular hour. What will happen if you not work for that normal hours? Your production will be lower. Fixed cost being constant, your volume will be affected. And if your volume is affected, cost per unit fixed cost is affected. So your budgeted were 640, but you are able to utilize only 78.12%, 12% capacity. Alright. See, try to understand. We have done this, right? 500 units is 100% capacity. You are manufacturing only 400 units. What is your capacity utilization? 80%. We are finding out this. Alright, n numbers of cases we have found out. At 30,000 units, we are 100% capacity. But we are working at 50% capacity. So how many units we are manufacturing? 15,000. It is the same thing. If we are working at, we are also working 640 hours. What will be the answer? Can you tell me? 100% capacity. We are working for 640 or 500? 500. Then we are utilizing only 78.125% of capacity. This is nothing but capacity ratio. Both are adverse? Yes, because they are less than 100. Volume. Volume ratio, I will be taking hours only. Volume ratio is the standard hours divided by budgeted hours. Standard hours divided by budgeted hours. Standard hours are 480, budgeted hours are 640. Multiplied by 100. %70. Please try to understand. Or what is volume ratio? Efficiency ratio multiplied by capacity ratio. Efficiency ratio is 96%. Capacity ratio is 78.125% multiplied by 100. Because I have taken it in points, it should be multiplied by 100. What is the answer? It should be 70. Correct. What was your capacity of manufacturing? Capacity 80 units. How much you are actually manufacturing? 60 units. Believe me, you are able to utilize only 75% of capacity. Try to even do it. We are going to do it, but try to even do it. 60 divided by 80. It is how much capacity? Why you are utilizing only 75% of capacity? Somewhat because of efficiency, somewhat because of capacity. So your volume has been only 75% of your total capacity. I can find out the same answer. This is not for the purpose of examination. This is for the purpose of explanation. This point is n numbers of times asked in examination, just to calculating of ratios. We have also understood efficiency ratio in form of output. I'll be again explaining you. Capacity ratio with the formula of output, and volume ratio we have done only with hours. So volume ratio also let us do it by efficiency ratio, that is actual output divided by standard output multiplied by standard output divided by budgeted output. What will be answer? Actual output divided by budgeted output, which will be which ratio? Volume ratio. I am finding out all three answers, efficiency, capacity and volume ratio, by output units in the same question. So, based upon output, I am finding out same ratios. First is efficiency ratio. See, if actual output is higher than standard output, it is better. So actual output will be in numerator, standard output will be in denominator. What is actual output in our case? 60 units. What is standard output in our case? 80 units. This is where people make mistake. 80 units is budgeted output and not the standard output. Efficiency ratio is found out by standard output. What we were doing in labor or employee cost, we were doing the same thing. How to find out standard output? I'll tell you. Standard output is a standard output for actual hour. It is standard output for actual hours. How many actual hours you are working? 500 hours. One unit in standard should be manufactured in how many hours? 8 hours. Then in 500 hours, how many units should be standard manufactured? 500 into 1 divided by 8. 62.5 units. What is 80 units? Can anyone tell me what is 80 units? Budgeted output. What is 60 units? Actual output. What is 62.5 units? Standard. What is the standard output? Standard output for actual hours. It is 62.5 units is standard output. Standard output is 62.5 multiplied by 100. Should be 96%. Let us try to understand logically. If you are working for 500 hours, you should be manufacturing 62.5 units. What you are actually manufacturing? 60. If you are manufacturing 62.5 units, what is your efficiency? 100%. If you are manufacturing 60 units, what is your efficiency? 96%, right? So this is my efficiency ratio, which will be same if you calculate even if by number of hours. Number 2, what is capacity ratio? Capacity ratio can be found out by standard output divided by budgeted output. Standard output is the 62.5 and budgeted output is 80. Budgeted output is 80. What is the answer? 78.125%. What your CEO or high level of management says, how many units you can manufacture per month or for a period? 80 units. If you are manufacturing actually 80 units, you are working at your 100% capacity, but you are actually manufacturing only 62.5. You are actually manufacturing 62.5 or you are actually manufacturing 60? 60. You should take 60 not over here. You will be getting same answer if you find out 60. No, of course not. Our previous answer is 78.125 or this is 78.125. What is 62? Why we have taken 62.5? I agree, we should take over here 60. This is for actual only. Try to understand. We are working for number of hours so that we can manufacture 62.5 units. Then why you are manufacturing actually 60 units? This is because of efficiency and not because of capacity. How much capacity you are utilizing? Can you tell me? You are utilizing capacity to manufacture 62.5 units. Then why you are manufacturing 60 units? Because of efficiency and not because of capacity. So here actual output will not be taken and standard output will be taken. 78.125%. And number 3, volume ratio. I hope if we multiply this two, it should be 75%, or it should be actual output divided by budgeted output. Here the concept remains same. Actual output is 60, budgeted output is 80, which will be is equal to 70. Do you understand why we should not take 60 over here? Simplest answer is because we are taking 60 over here. All right. So when you take 60, you consider both the things, capacity also and efficiency also. When you take 62.5, you are just considering capacity. How much hours you are working to cover your that particular capacity. These are three ratios, three different type of ratios: efficiency ratio, capacity ratio, and volume ratio. Let us solve some of the questions related to it. 13.10. The activity ratio, this is nothing but volume ratio of a concern is 95.6%. Volume ratio is 95.6%. Whereas the capacity ratio is 105%. Capacity ratio is 105%. 5%. What will be efficiency ratio? I don't want answer. I want answer of my question. Whether it will be greater than 100 or less than 100. Think and give the answer. Don't calculate it and tell me. Do it without calculation. What is your overall volume ratio? 95.6. You understand this, right? Efficiency, capacity plus calendar is equal to volume. We normally ignore calendar. Volume is 95.6. Means you are manufacturing less than budgeted volume. Right? But your capacity is 105%. Means you are working more than your capacity. Still your overall answer is 95.6. Now tell me whether efficiency ratio will be less than 100% or more than 100%. Very less than 100%, right? Even less than just 95.6%. Because geometric mean of this and this is becoming this. Alright, geometric mean of this and this is becoming this. Then it will be even less than 95.6%. I am doing this. Volume ratio is equal to efficiency ratio multiplied by capacity ratio. Volume ratio is the always write down in this manner 0.956. Never write it down in percentage. Because if you are writing down in percentage, you have already multiplied 100. So if you multiply two figures which are already multiplied with 100, you will have to divide it by 10,000 to get the correct answer. This is multiple of 1. This is not multiple of 100. So multiple of 1, so division of 1, you will not have to do it when you actually mathematically calculate it. Efficiency ratio is given? No. Efficiency ratio multiplied by capacity ratio is 1.05 divided by 100. 105 divided by 100 is 1.05. So, efficiency ratio will be 0.956 upon 1.05. Of course, now I want answer in percentage, so I will multiply it with 100. 0.956 multiplied by 1.05. It is 100.38. So, it is divided. 0.956 divided by 1.05. It is 0.9104, 91.04 will be nothing but which ratio? See, the problem is a student not knowing anything about efficiency ratio, capacity ratio and volume ratio can also solve this question. Just if he or she has mugged up the formulas, right? But still knowing the concept is more important than just mugging it up. Calculate efficiency ratio, activity ratio from the following data. Capacity ratio is 75%. It is given. Standard time per unit is 4 hours. Budgeted output is 6,000 units. Actual output is 5,000 units. Can you give me all three ratios based upon output? Efficiency ratio based upon output. Help me out. Actual output divided by standard output. Capacity ratio based upon output. Standard output divided by budgeted output. And volume ratio based upon output. Actual output divided by budgeted output. Which ratio is given? Capacity ratio is given. So standard output divided by budgeted output will be is equal to 0.75. Budgeted output is given 6,000 units. So standard output divided by 6,000 units will be is equal to 0.75. I will be getting answer of standard output, which is 6,000 into 0.75. 4,500. 6,000 units are budgeted output, 4,500 units is standard output for actual hours. Actual output is 5,000. What they want? Efficiency ratio. Actual output 5,000 units divided by standard output 4,500 units multiplied by 100. 5,000 divided by 4,500 multiplied by 100, it is 111.11%. They also want activity or volume ratio. Activity and volume ratio are same. Actual output is 5,000. Budgeted output is 6,000. 5,000 divided by 5 divided by 6 multiplied by 100. It is 83.33%. We are going to see 13.12. Please understand, in standard costing, even if I have told you in previous lecture that this is the end of the concept, there will be always a new concept when you will start a new question. Again, in this question we are going to find out sales variance. Trident Toys Limited requires you to compute sales variances from the following data: Bravo Toys, Champ Toys and Super Toys. What was budget? You need to sell 5,000 units. Actual is you are selling 5,750 units. Again, in Champ Toys, both figures are given. So unit sales answer is given. Selling price budgeted and selling price actual is also given. Please understand, there is no difference between raw material and sales. In raw material also their quantity comes. In sales also there is a quantity which will come. There is one main major difference is raw material is your cost and sales is your revenue. Alright. So how to deal with it, that I'll tell you. Also, raw material for actual production and raw material required for standard production will be different. One is budgeted raw material, another is standard raw material. In sales, it is not there. If 400 units were to be sold and you are actually selling 500 units, it is good. Alright. So for actual production, concept will not come. So the concept will become easy. Sir, then how to find out sales variance? Please try to concentrate. I will be doing this. Standard quantity into standard price. Revise actual quantity into standard price. Actual quantity into standard price. Actual quantity into actual price. For all these three types of toys, B, C and S. B, C and S. Sir, do we need to find out standard quantity by cross multiplying something? No, you can directly take standard quantity. Standard quantity is 5,000, 4,000 and 6,000. 5,000, 4,000, 6,000. Standard price is 100, 200, 180. 100, 200, 180. Actual quantity is 5750. 5750, 4850 and 5,000. Standard price we already know, it is 100, 200, 180. Actual quantity I can just copy it down over here: 5750, 4850 and 5,000. Actual price is 120, 180, 165. 120, 180, 160. Revised actual quantity. Anyone knows the concept how to find out revised actual quantity? It is actual quantity in standard ratio. What is actual quantity total first? It is 5750 plus 4850 plus 5000. It is 15,600. Should be in standard ratio. What is standard ratio? 5 is to 4 is to 6. 5 is to 4 is to 6. This is 15. So 15,600 into 5 divided by 15. 5,200. 15,600 into 4 divided by 15, which is 4160. 15,600 into 6 divided by 15, 6240. This is my revised actual quantity. 5,200, 4160, 624. Multiplied by standard price 100, 200, 180. You need to find out all the answers. This will be 5 lakhs. This will be 8 lakhs. Ten lakh 80,000. This is 23 lakh 80,000. This will be 5 lakh 20,000. Eight lakh 32,000. 11 lakh 23,200. Eleven lakh 23,200 plus 8 lakh 32,000 plus 5 lakh 20,000. 24 lakh 75,200. Tell me if I am making somewhere a mistake. This is 5 lakh 75,000. Nine lakh 70,000. Nine lakhs. ₹24 lakh 45,000. Correct. Actually, you should find out for all three quantities and total, but I am finding out only of total. Please understand what we normally do. This minus this. Please concentrate. Why we do this? We want to find out standard minus actual. If standard is 10 rupees and actual is 9 rupees, and if this is cost, then it should be positive 1. You are saving 1 rupees. But if it is sales, standard was 10, actual is 9. You are losing 1 rupees. Sir, then what to do? Should we rub this full chart and do it again? No, try to concentrate. I'll just make one change. Instead of subtracting this from the side, I will be subtracting this from the side. Because it is the sales variance. If the actual is higher, that is better. So if the right hand side is higher, it is better. 24 lakh 75,200 minus 23 lakh. It is how much? 95,200, and it will be positive because we are doing this figure minus this figure. What is this? I'll tell you. It is a sales quantity variance. If it was raw material, it would have been yield variance. If it would have been labor, it would have been sub-efficiency variance. If it is the sales, it is quantity variance. This minus this, no. This minus this. 24 lakh 45,000 divided minus 24 lakh 75,000. It is minus 30,200. This is termed as sales mix variance. It is positive or negative? Negative. What does this mean? Can anyone tell me? You are Jenny selling price? Exactly. You are selling less quantity of the units which is having higher selling price. Overall, you are selling more units. It is sales quantity variance, right? But because of mixture, that is negative 30,200, and the total is termed as a sales volume variance. Total of this two. What is the answer? This minus this is the selling price variance. Now I need not explain you this, right? You understand what is happening. You might be selling at a higher price per unit. You might be selling at a lower price per unit. This will give you the net answer. What is selling price variance? It should be minus. It is this minus this. Minus 57,000. It is selling price variance. Yes. Yes, plus 65,000. And total will be termed as sales. Which will be positive 8,000. See, if you show someone chart, variance chart of raw material or variance chart of sales, practically it will look same. There is only two difference. Try to concentrate. What are the two differences? This arrow is one difference. Instead of going from left to right, it is going from right to left. Another is this name. Right? In raw material, it is a yield variance. In labor, it is the sub-efficiency variance. Here, it is a sales quantity variance. Otherwise, everything is same. Try to understand. Sometimes instead of taking standard price, what we take as standard price when we are finding out sales variance, it is the standard selling price. And what we take as actual price, which is actual selling. For a company, selling price is important or profit is important? Profit is important. Say there might be a product which might be having more selling price but less profit per unit because the cost is higher. And there might be a product which might be having a selling price of 10 rupees but cost would be only 1. So the margin might be huge, which is 9 rupees. So sometimes instead of taking standard SP, standard price, as standard selling price, what we take is standard margin. I'm not writing down profit. What I'm writing down, standard margin. And instead of actual selling price, I take actual margin. How to find out standard margin? Please try to concentrate. Standard margin is equal to selling price per unit minus standard cost per unit. It is total, right? So what is the standard price, selling price? I should write down standard selling price. Standard selling price per unit minus standard cost per unit. So if standard selling price is 100 and standard cost is 80, what is 20? Standard profit. How to find out actual margin? Please try to understand. Actual selling price per unit minus, help me out, actual cost per. Here there is a problem. Whenever you are doing standard costing, whenever a company is following standard costing, so you have heard company follows a traditional method of absorption costing. Company follows manufacturing cost method of valuation of closing stock. Company follows a FIFO method, LIFO method of valuation of stock. Some company also follows a standard cost method for valuing the cost. So if they want to value their closing stock, they will not be valuing it by current year production cost. They will be valuing it by standard cost. So it is possible that current year the spend might have taken 55 rupees to manufacture. But I will be valuing my closing stock at 50 rupees, which is my standard cost. So whatever excess is of 5 rupees, I am valuing less as far as which cost is concerned, closing stock is concerned. So my cost of manufacturing per unit of course will go down because I am absorbing less in closing stock. So in actual margin, actual selling price per unit minus standard cost per unit is subtracted. What is the current year cost is not important. No, it is important. But what you are finding out right now, cost variance or sales variance? Sales variance. So if the product is profitable, just because current year cost has increased, say let me take about product X. This is say product X. Selling price is 10 rupees and actual cost is 11 rupees. But the standard cost is 8 rupees. What we take, 10 minus 8 or 10 minus 11? 10 minus 8. Is it all right? What we take is actual selling price minus standard. We don't take 11. What is 11? Actual cost per unit in current year. So we will be taking 2 instead of minus 1. Agreed? My sales variance is positive only. My sales variance is positive only. Why I am incurring loss in this product X? Can you tell me? Because of sales or because of cost? I am incurring losses in this product X because of I am selling less product X or because the cost is higher. Then it should be included in cost variance or sales variance. Cost variance, right? It should not be included in sales variance. So in sales variance, I always take standard cost per unit. For that, you will have to again write down this same chart again. This is selling variance based upon selling price. If it is based upon margin, let me help you out with some of the figures. We are not doing it again. I am just writing it with different color pen. Let me write it with different color pen. It is margin. Try to concentrate. What is margin of this product B? I'll tell you. Standard margin, 100 minus cost per unit. This is standard. 100 minus 90 is 10. So here I'll be taking 10. 200 minus 170 is 30. 180 minus 130 is 50. Of course, you should understand now I will not be multiplying with 100, 200 and 180, right? It will be 5,000 into 10, 4,000 into 30 and 6,000 into 50. What is 10, 30 and 50? Standard margin, right? So here also I will be taking 10, 30 and 50. 10, 30, 50. Help me out. What will be actual margin? 120 is what? Actual selling price minus actual cost. Not given in the question. Even if it is given, I will not be taking it. I will be always taking standard cost. So 120 minus 90 is 30. 180 minus 170 is 10. And 165 minus 130 is 35. I am not rewriting it again, but this is how the sales variance will be found out by margin method. It was last asked in November 2010 and it was probably of 10 marks. They asked in this question both the types of method based upon turnover also and based upon profit also. So if it is asked in examination, you will have to write down both the charts and it will be a very lengthy process in that case. You got an idea, right? How to solve it in margin method. Instead of standard selling price, I'll be taking standard margin, which is standard selling price minus standard cost price. And instead of actual selling price, you will be taking actual margin, which is actual selling price minus standard cost per unit. We are going to see 13.13. The following information is available for the cost records of the company for the month of July. Material purchased. Now they are giving some different informations. Material purchased 22,000 pieces at the rate of 90,000. Can you give me the rate? $90,000 divided by 22,000, which is 4.09 approximately. Material consumed is 21,000 pieces. Actual wages paid for 5,150 hours is 25,750. What is actual wage rate? 25,750 divided by 5150. That's coming 5. Fixed factory overhead incurred 46,000. Fixed factory overhead budgeted 42,000. Unit produced 1900 units. Standard rates and price are direct material 4.50 per piece. Standard input 10 pieces per unit. Direct labor rate rupees 6 per hour. That's a standard. Standard requirement 2.5 hours per unit. Overhead, there is only fixed overhead, so I will be taking that as rupees 8 per labor hour. You are required to show standard cost chart and calculate the following variances: material price variance, material usage variance, labor rate variance, labor efficiency variance, and fixed overhead all variance. What I'll be doing, I will be preparing 3 charts with material, labor, and fixed overhead variances. But the chart should be, don't write down everything, right? Revised actual quantity is not required because there is only one type of material, right? So in material, it will be standard quantity into standard rate, actual quantity into standard rate, and actual quantity into actual. Only one point is important. This standard quantity of raw material is for actual production, or it is standard quantity of raw material for standard production? It is for actual production. It is a standard quantity for actual production. Actual, how much production you are doing? 1900 units. How many pieces of raw material is required for 1 unit of output? 10. So how many pieces of raw material will be required for 1900 units of output? You need to understand this units are output and this pieces are input. So for one output, 10 units of or 10 pieces of inputs are required. So for 1900 units of output, how much pieces will be required? Can you tell me? 1900 into 10. What is this? 19,000 pieces of raw material will be required to manufacture 1900 units. What is standard rate per piece? 4.50. I can directly multiply 4.50. What is the answer? 85,500 rupees. What is actual quantity? Sir, should I take purchased or should I take consumed? Let me give you 1 minute. You tell me without seeing the answer. You should take consume or you should take purchase. This is, see, with what you are comparing is this. What is this? Standard quantity for manufacturing 1900 units. Then what you should take as actual quantity? Actual quantity for manufacturing 1900 units. Again, should I take purchase or consume? I should take consume, right? 21,000 pieces will be used to manufacture 1900 units. You might have purchased 22,000 pieces where 1,000 pieces might be in your stock, right? You should be taking 21,000 pieces into standard rate is 4.5 only. Actual quantity into actual price is not required because directly it is given. No, it is not given. Material consumed is 21,000 pieces and the price, current year price is 4.09. Sir, can we take purchase price? Yes. Right. What is the answer? 21,000 into 4.5? 24,500. 94,000. And what is this? This minus this material. So usage variance. This minus this is material rate variance. And this minus this will be material. Tell me fast the answers. Minus 9,000. Positive. And overall minus 390. This is material. I am going to labor. Labor will be standard hours into standard rate. Actual hours into standard rate. Actual hours into actual rate. See, I am first writing down the figures which are available. You will understand how easy the question is. Standard rate is given or not? Standard rate per hour. Direct labor rate rupees 6 per hour. It is directly given. So this is also directly given 6 per hour. Actual hours are given or not? Yes, actual hours is 5150 hours. 5150. 5150. Actual rate is given or not? Yes, 5150 hours are paid at an actual rate of 5 rupees. And this answer also we know. It is 25,750. What is the only figure not directly written in the question is standard hours. What we need to find out, tell me. Standard hours for manufacturing 1900 units. Standard hours for producing 1900 units. That is directly also given. What is 2.5 hours per unit is required, and those all are standard rates. 2.5 hour per unit. 2.5 hour for 1 unit, then for 1900 units, it will be 1900 into 2.5. What is the answer? 4,750. So if you are manufacturing 1900 units, 4,750 standard is available to you. 4750. This will be efficiency variance. This will be labor rate variance. This will be labor cost variance. Just find out all the figures. We will be going to fixed overhead. See, normally in fixed overhead, you need standard rate per unit. This is a fixed overhead. It is not a variable overhead or total. You need standard rate per hour. Sometimes if they are not available by one also, you can solve everything. Standard rate per unit, fixed overhead. Overhead is rupees 8 per labor hour. overhead is rupees 8 per labor hour. It is rupees 8 per labor. Sir, we take labor hour? Yes. In all previous questions also hours written were labor hours. What does it mean? We are absorbing the fixed overhead based upon labor hours, right? It is rupees 8 per labor hour. How many labor hours are required to manufacture one unit? 2.5 labor hours are required to manufacture one unit. So what will be standard rate per unit? 2.5 labor hours multiplied by rupees 8 per labor hour. What is this answer? 20 rupees per unit. This is my standard for fixed overhead. I will be drawing my chart of fixed overhead. It is actual output into standard rate. You can also write down standard hours into standard rate or actual output into standard rate. Actual hours into standard rate. Then we write down preferred fixed overhead. I am not writing it down because I know calendar information is not given. So budgeted fixed overhead and actual fixed overhead. Actual output is 900 units multiplied by standard rate per unit will be 20. What is the answer? 38. Actual hours. Actual hours you can take labor hour because fixed overhead is absorbed based upon labor hours. Actual hours are 5150 multiplied by standard rate per hour is 8. ₹41,200. Budgeted fixed overhead and actual fixed overhead will be given. Fixed factory overhead incurred. This is actual fixed overhead 46,000. And budgeted fixed overhead budgeted 42,000. This is efficiency variance. This is capacity variance. Total is volume variance. This will be expenditure variance. Total will be fixed overhead cost variance. This is minus 3,200. Minus 800 minus 4,000. This is minus 4,000. Total will be minus 8,000. What we'll be doing is we'll be first revising all the variances starting from material up till fixed overhead. We will be revising all the variances and then we'll be starting with the questions. You need to write down heading and you need to try out to write down full chart of that particular variance. Start with material. You need to write it down on your own, right? Standard quantity into standard price. Revised actual quantity into standard price. Actual quantity into standard price. Actual quantity into actual. This minus this is yield variance. This minus this is material mix variance. Total is usage variance. This is material price or rate variance. Total is material total cost variance. We are going to labor. It is standard hours into standard rate. Revised net actual hours into standard rate. Net actual hours into standard rate. Actual hours into standard rate. Actual hours into actual rate. This is the sub efficiency variance. This is the mix variance. This is efficiency variance. This is idle time variance. This is labor rate variance. Total of this three is a total labor cost variance. Then we went to variable overhead variance, standard hours into standard rate, actual hours into standard rate, actual variable overhead, or it is actual hours into actual rate. This is efficiency variance. This is expenditure variance. Total will be total variable cost variance. This can also be found out by actual output into standard rate or standard hours into standard rate. Because standard hours are always for actual output. This can also be found out by standard output multiplied by standard rate per output. What is standard output? When you write down standard and not budgeted, it is a standard output for actual hours. Then somewhat difficult, fixed overhead. Standard hours into standard rate. Or it is actual output into standard rate. Then it is actual hours into standard rate. Preferred fixed overhead. Budgeted fixed overhead. Actual fixed. This minus this is volume variance. This minus this is volume variance. This minus this is expenditure variance. This is the total fixed cost, fixed overhead variance. Whereby this minus this is efficiency, this minus this is capacity, and this minus this is calendar variance. And we have done some ratios of this volume variance. Volume or activity ratio, then it is efficiency ratio, then it is capacity ratio. If I find out in terms of hours, what is efficiency ratio? If actual hours are lower, the efficiency is higher. Actual hours, standard hours. Actual hours, budgeted hours. And volume or activity ratio is standard hours upon budgeted. What is the difference between standard hours and budgeted hours? Standard is for actual production and budgeted is for standard production or budgeted production. Based upon output, efficiency ratio is actual output divided by standard output. Capacity ratio is standard output upon budgeted output. And volume ratio is actual output upon budgeted output. This is also efficiency multiplied by capacity ratio. We are ignoring here calendar ratio. Now please understand, standard costing normally becomes difficult for the student just because you expect that after learning this 4 or 5 charts, material, labor, variable overhead, fixed overhead, and this ratios, you will be getting answers of all the questions. You can get answer of all the questions only if you have understood the chart, rather than you have just mugged up the chart. Mugged up the chart, 50% of the questions can be solved. But to actually solve it in the examination, you should have understood the chart. Suppose this is fixed overhead variance. You should have given your time to decide why this is an efficiency ratio, why this is a capacity ratio, why this is a calendar ratio. Take your own examples and try to say why this particular answer is negative and why it is because of capacity it is negative. What is volume variance? It is total of this three, but you need to understand ultimately it is this minus this. Agreed? Volume variance is this minus this. What is this? Budgeted fixed overhead. What your CEO has told that what will be cost per annum or cost per month. What is this? Actual fixed overhead, which is not a part of volume variance. Actual fixed overhead is not a part of volume variance. This also we have already learned. Just you don't understand where we have learned it. We have learned this, yes. This is nothing but absorbed overhead. How we were absorbing the overhead? We were finding out some blanket rate. We were telling it at as overhead recovery rate. Then what we were doing? What is the actual output or what is the actual production? Say 100 units. Multiplied by that rate, we were terming it as absorbed overhead. We were terming it as absorbed overhead. We were comparing it with actual overhead and we were terming difference between this and this two as under or over absorption, and then we were giving the treatment if there is an under absorption, if it is normal, if it is abnormal. We were already doing this, but we were doing difference between this and this. So what we were totally doing, we were giving effect of total fixed overhead variance, what is absorbed and what is actual. But you need to give time to each and every point. Just remembering that first variance is efficiency variance will help you out, but understand when you will be doing it again, it will be a repetitive process to mug up the chart, and if they ask something different or if the calculation is again to be mugged up, it is very difficult. If you are actually knowing what you are doing, you can easily do it. What is the standard hours? Standard hours for actual production multiplied by standard rate per hour, you will be getting the same answer as absorbed overhead. You will be getting same answer as absorbed overhead. This is means you need to have everything, every idea as a logical idea. We need to start with 13.14. KPR Limited operates a system of standard costing in respect of one of its product, which is manufactured with a single cost center. The standard cost cart of the product is as under. Direct material is given, direct labor is given, and factory overhead is given. The production schedule for the month of the June required completion of 40,000 units. However, 40,960 units were completed. So, these were budgeted during the month without opening and closing stock of work in progress in inventories. Purchases during the month of June was 2,25,000 kgs of material at a rate of 4.50 per kg. This is actual quantity, this is actual rate. Production and sales record for the month showed the following actual result. Material used 2,05,600. Direct labor 1,21,200 hours. Cost incurred is this much. Total factory overhead cost incurred is rupees 1 lakh. Sales is 40,000 units. How many you have manufactured? 4960. How much you have sold? 40,000. So 960 would be in your closing stock. Selling price to be so fixed so as to allow markup of 20% on selling price required. Calculate material variance based on consumption of material. Even if it is not told, we always find out material variance for what we have manufactured and not for what we have sold. You find out profit of sales only when you are doing marginal costing. Believe me, marginal costing you will never find out opening stock and closing stock. You go to marginal costing once, you will always do this. Sales minus variable cost is equal to contribution minus fixed cost. So you take sales minus cost of sales. You sales minus, so there is no opening stock and closing stock. Otherwise, You always find out cost per unit manufactured and then you adjust your opening and closing. Calculate labor variance and total variance of the factory overhead. Factory overhead, I think it is a variable overhead. Alright. Prepare income statement for June showing actual gross margin. An incentive scheme is in operation in the company whereby employees are paid a bonus of 50% of direct labor hours saved at a standard direct labor hour rate. Calculate the bonus amount. Alright. We are going to solve all three variances. I am first starting with material variance. There is one variant, one material or two material. There is only one material. So there will not be concept of mix variance. So there will be no concept of revised actual quantity. So I am just drawing a chart, standard quantity into standard price, actual quantity into standard price, actual quantity into actual price. See, always first do this. Find out the figures which are already available. Actual quantity purchased. No. We are finding out this variance for actual output. Agreed? Whenever we were comparing that two charts were for actual. One was a standard for actual output, one was actual for actual output. So when you are finding out something for actual output, unit output or unit manufactured is more important than unit purchased, or unit purchased is not important and unit consumed is important. What is consumed material? 2,05,600. 2,05,600 is nothing but actual quantity. 2,05,600. What is the actual price at which it is purchased? 4.5. Sir, we have purchased 2,25,000. You have purchased it. At what rate? 4.50. So 2,05,600 will be consumed at also 4.50. Is the standard price of direct material given? Yes. 5 kgs at the rate of 4.20. Can you tell me what is the standard price per kg of raw material? Is it 21 or 4.20? 4.20. It is not 21, right? 21 is what? If you want to have one output, 5 kgs are required. So 5 multiplied by 4.20. So for one output, total material required will be of rupees 21. It is 4.20. Standard price we know 4.20. So always the question comes over here. What is this? Can you tell me? Standard quantity is all right, but full answer, what is it? Standard quantity for actual production. How much actual output you are doing? 40,960? 40,960. This is output. This is not input. For 1 kg of output, how much kgs, or 1 unit of output, how much kgs of input standard is required? 5 kgs multiplied by 5. This brown color answer. What is this? Can you tell me? Standard kgs required for actual output or actual production. You can find out all the answers. 40,950, 960 multiplied by 5 multiplied by 4.2. 8,60,160. Two lakh 5,600 multiplied by 4.2. 8,63,520. 2,05,600 multiplied by 4.5. 925,200. This minus this is material usage variance. This is material price variance or rate variance. Total is material cost variance. Material usage variance will be minus 3420. Price variance is it is minus 61,680 and net is 65. This total is correct. We are going to labor variance. One type of labor, two types of labor, one type of labor. There is ideal time? No, it is not given. So standard hours into standard rate, actual hours into standard rate, actual hours into actual rate. First find out the figures which are already available. Direct labor hours 1,21,200 and these are actual results. 1,21,200, 1,21,200, 1,21,000. Standard rate per hour is also directly available, 3 rupees. Actual rate, direct labor, how much is total number of hours? 1,21,200. What is the total cost of the labor? 3,87,840. I can easily find out actual rate per hour. It will be 387,840 divided by 1,21,200. It is 3.2. Actual rate is 3. Standard hours. Standard hours for actual production. What is actual production? 40,960 units. How much standard labor hour is required to manufacture one unit? 3 hours at the rate of rupees 3. So 3 hours multiplied by 3. This brown color answer will be hours. They are standard hours available for manufacturing actual output. You can find out all the answers. It is 368,640. This is 363,600. 387,840. This minus this is labor efficiency variance will be plus 5040. This is labor price or rate variance, which is minus 24,240. labor cost 19,200. We need to also find out factory overhead variance. Assumed to be fixed. Sir, can't we assume to be a variable? You can assume it to be variable. If it is variable, it is standard hours into standard rate, actual hours into standard rate, and actual hours into actual rate. This is how I'll be finding out the answer. I am assuming it to be fixed. All right. I am finding out first standard hours into standard rate and last actual fixed overhead. All right. Standard hours is always for actual production. All right. Is there any other way by which we can find out this first column answer? It is actual output into standard rate. But here you will have to take standard rate per unit. Are you knowing actual output? Yes, it is 40,960. Do you know standard rate per unit? Yes, it is directly given. Factory overhead 1.20 per labor hour, 3.60 is per unit, and 1.20 is per so 3.60 is given. As these are units, it should be multiplied with units. Actual fixed overhead is also given, rupees 1 lakh. What is 4960 multiplied by 3.6? 456 rupees. Can we find out any other answer? The answer is yes. We can find out actual hours into standard rate per hour. What is actual hours available? Yes. Sir, which hours we will have to take? It is based upon labor hours. The fixed overhead is absorbed based upon labor hours. Direct labor hours we are knowing 121, 200. Multiplied by. Now standard rate should be per unit or per hour? Per hour. What is standard rate per hour? 1.20. 121, 200 into 1.145, 440. We are also having budgeted fixed overhead. No, it is not there. But I can find out a budgeted fixed overhead. What were budgeted units? 40,960. No, they were actual units. What were budgeted units? 40,000. What is budgeted fixed cost per unit? 3.60. So 40,000 into 3.60 will be budgeted fixed overhead. 40,000 into 3.6. What is the answer? 1 lakh 40. Expenditure variance is positive 44,000. This will be efficiency variance. This will be capacity variance. Total of this two will be volume variance. Total of this two will be fixed overhead cost. One 47,456 minus 145,440. 2016. 145,440 minus 1,44,000. 1440. This is plus 44,000. Volume variance will be 3,456. This will be 47,450. This is factory overhead variance, which we have assumed it to be fixed. We are going for third question. Prepare income statement for June showing actual gross margin. Now please try to understand, we cannot show income statement by marginal costing. We will have to show it by absorption costing. I'll tell you how to show it by absorption costing. It is the sales. How many units are sold? It is given. Sales is 40,000 units. At what price? Allow markup of 20% on selling price. 20% on selling price is how much percentage on cost? Can anyone tell me? 25% on cost. So I want profit of 25% on cost. Markup is same as profit. All right. Which cost I should consider? There are two types of cost. One is manufacturing actual cost, another is manufacturing standard cost, right? Whenever a company follows a standard costing, they will decide everything based upon standard cost and not on actual cost. I can find out actual cost. How I can find out actual cost? I'll tell you. I can get actual raw material price, actual labor price, actual overhead divided by total number of units manufactured. I will be getting cost per unit. Cost per raw material is available. Labor I can find out, which I have already found out, 3.2 or something. And 1 lakh divided by 40,960 will be my actual cost per unit plus 20% markup. But whenever company follows a standard costing system, they follow standard cost plus markup. What is our standard cost per unit? 33.60. So what will be my selling price? 33.60 plus 25%, which is markup, which is my profit. What is the answer? 16 lakh 80,000. minus COGS. How to find out COGS? All of you agree? Opening plus production minus closing. Opening is not given. What is a total production cost? How many units are manufactured? 40,960. So I will have to find out cost of 40,960 units. What is the raw material cost for this? It is 2,05,600 multiplied by 4.50. I will be having it over here. 9,25,200. What is this? Actual quantity into actual price of raw material. So this is my cost. 9,25,200. 9,25,200 of material. Labor, I think it is directly given. 3,87,840. 3,87,840. And overhead also I think it is directly given, which is rupees 1 lakh. What is the total cost of manufacturing 40,960? What is the answer? This is total cost of manufacturing 40,000 units or 40,960 units? 40,960. So this cannot be compared with 16,80,000. Accountancy, matching cost concept. So I reduced nothing but closing stock. How many units are there in closing stock? 960 units. All of you agree? 40,960 we have manufactured. Opening stock was 0 and we have sold 40,000 units. So 960 will be in closing stock. It should be valued at, whenever you are following standard costing, closing stock will be also valued at standard cost. Your selling price will be determined on standard cost. Opening stock automatically will be recorded at standard cost because in last year you have recorded closing stock at standard cost. So 960 into standard cost is 33.60. Sir, can I value it at production cost? The answer is yes, but then you are not purely following standard costing method. What is negative figure of this? 32,250. What will be my COGS? 13,80,780. What is my profit is 2,99,216. Verify whether our answer is correct or not, because on selling price I should get 20% profit, right? So selling price is 16,80,000 multiplied by 20%. Is there or not there? Not there. Can anyone tell me why it is not there? Sales is valued at standard cost plus profit. Closing stock is valued at standard cost. Cost of 40,960 which are actually manufactured is valued at, this is valued at actual cost or standard cost? It will be valued at cost. Actual cost or standard cost? Actual cost and not standard cost. So this will never match. If you value this at standard cost, then you will be getting the answer. Please understand, whenever you are following standard costing selling price determination, your actual figure will not be as per the percentage which are given. Why? This 25% is on standard cost. So if you take over your actual cost, you will not be getting 25% on cost as your profit, right? But whenever you are following standard costing, you should value your opening stock, your closing stock at standard cost. And whenever you are determining your selling price, you will have to use the base of standard cost and not of actual cost. So this is where ICAI is having a problem. I feel it not only ICAI, but this problem don't tell to market that CA value is going down because they are teaching you outdated or they are not teaching it in a proper manner. This is one of the best method in India to teach something. What happens is you know all the calculations, but you don't understand actually where this will happen. Do you think some company will be following standard costing? So I'll tell you a simple thing. Tanna Travels is operating from Bhavnagar to Ahmedabad. Fuel cost change or does not change? It changes probably on monthly basis. Let us assume that the price of petrol changes or diesel changes 12 times in a year. That is one time in a month. You ask them the selling price. It will not change every month. Suppose today you can reach from Bhavnagar to Ahmedabad at say 280 rupees or 350 rupees. Next month also it will be 350. The fuel price might have increased. They follow actual cost determination selling price or standard cost determination of selling price. They follow standard cost determination of selling price. They have decided that okay, this is the standard. Actual might be more, actual might be less, but they have already determined the selling price. So for the year, for the month, for 6 months, they have already determined the selling price. And then they use that marketing technique. Fuel cost has gone up by 50 paisa. So our ticket price we are converting from 200 to 240. Alright. Their cost has not increased by 40 rupees per passenger. But they are charging you 40 rupees per passenger, but that is just marketing. But their selling price normally is fixed. It does not change it. You go to eat Pani Puri, it remains 10 rupees. Sometimes or 20 rupees. Sometimes when the potato price increases, do they change their selling price immediately? No, in long term they might increase because in long term they will increase their standard cost. Are you getting it? Majority of business are priced at standard cost and not at actual cost, right? Or it is forecasted cost. Forecasted means standard cost. So when the price determination is based upon cost, majority of time what cost you will be using? Standard cost. Sir, opening stock still should not be valued at standard cost. It should be valued at actual cost because that cost has already happened. But see, it will disturb the pricing. Say potatoes, we are valuing Pani Puri. Potatoes were last year 5 rupees per kg. In current year, it is 6 rupees per kg. And you are having n numbers of stock of potatoes in opening. You will, for valuing your selling price, you will be valuing that potatoes at 5 rupees. If you are using which cost? Actual cost, which will lower your cost and which will lower your selling price. In current year, are you going to get it at 5 rupees or at 10 rupees? 10 rupees, because the current price might be 10 rupees. What is good? To price your Pani Puri at what rate? 10 rupees cost, right? 10 rupees cost, which is which cost? Standard cost as determined by you, keeping in your mind the current price of the potatoes. So majority of business uses standard costing, but our marks are not related to practical aspect. It is related to how to calculate this. And when I ask to students, they just tell me that, sir, if you are following standard costing, your stock will be valued not at actual cost, it will be valued at standard cost. But why it will be valued at standard cost? Try to concentrate. You will be valuing even this at forecasted cost, this at standard cost, this at standard cost. And so you will be determining selling price based upon standard cost, right? Here you want actual revenue statement. So actual, this you cannot write it down right now at standard cost. Why? then you will not be getting actual profit. You will be getting which profit? A standard profit. Standard revenue minus standard cost will be is equal to standard. When you are actually preparing revenue statement, this you will have to take it at a standard cost. Many of the authors suggest this also should be taken at actual cost. It is absolutely all right, because you are not following standard costing and finding out selling price. You are preparing a revenue statement and you need to find out the actual profit. This was 13.14. 13.15, 13.14, I think one question is pending. An incentive scheme is in operation in the company whereby employees are paid a bonus of 50% of direct labor hours saved at a standard direct labor hour rate. What is standard direct labor hour rate? 3 rupees, right? Calculate the bonus amount. We are changing the chapter from standard costing to labor costing, right? Standard hours minus actual hours is nothing but time saved. Go to labor variances chart. What is the standard hours? 40,960 into 3. What is 40,960 into 3? Standard hours for actual production. And you always take standard hours always for actual production. What is standard hours? 40,960 into 3. What is actual hours? They have given directly actual hours. 1,21,200. 1,21,000. What is time saved? Hours. This we have done in labor, but try to concentrate over here also. See, if the workers were working at 100% efficiency, you will end up paying 3 rupees on this hours. Agreed? These are number of hours. If they were working at 100% capacity, because they are working at higher capacity than 100%. See the efficiency variance also, it will be positive. In labor, efficiency variance will be positive. Is it positive in labor efficiency variance? It will be positive because the labor are having time saved. Labor are having time saved basically means they are working at a greater than 100% capacity. Had the labor be working at 100% capacity, you would have paid money on 1,22,800 hours. As the labor are working more than 100% capacity, they are completing the work in how many hours? 1,21,200. So if you are giving them payment based upon hours, number of hours, and you are giving on number of hours, hourly you are giving how much rupees? 3 rupees. So you will be actually paying on this amount. So 1680 into 3 rupees is money saved of the company. Exactly 1680 into 3. 5040. If it is money saved for the company, normally company will not give 100% bonus of their savings. What percentage bonus they are giving? It is 50%. Multiplied by 50% will be bonus to employees. What is the answer? 2520 rupees. Can you give me the name of the person who has given this bonus scheme? I'll say, right? Time saved into 50% into rate per hour. $13.15 is exactly same, just it is not having a concept of overhead. Otherwise, it is exactly same. And you don't have to prepare that particular idea of revenue account. We should repeat it. Not repeat. No, it is exactly same. Just the figures are different. Otherwise, it is exactly same. Just remove overhead portion and revenue statement portion. It is exactly 13.14. We are just not repeating in the class. 13.16, last one. And now there are some recent examination questions, and you will feel that they are somewhat easy questions, right? We have done difficult questions. A gang of workers normally consists of 30 skilled workers, 15 semi-skilled workers, and 10 unskilled workers. They are paid at a standard rate per hour as under. Let us do this. A gang of workers normally consists of 30 skilled workers, 15 semi-skilled workers, and 10 unskilled workers. They are paid at a standard rate per hour as under. So, what is standard is skilled, unskilled, skilled, semi-skilled, and unskilled. There are 30, 15, and 10. 30, 15, and 10. They are number of workers. I want answer in hours. They are paid at a standard rate per hour at 70, 65, and 50. In a normal working week of 40 hours, so in a week there are 40 hours multiplied by 40. These are number of workers, these are hours. 40, 40. This will be number of hours. How many hours? So this is number of workers, this is hour per week. So this will be total number of hours, 1200. This will be 600. This will be 400 hours. I know that this total is not going to help me, so I am not even solving it. In a normal working week of 40 hours, the gang is expected to produce 2000 units. So it is a standard units which are 2000 units of the output. During the week ended 31st March 2019, a gang consisted of 40 skilled, 10 semi-skilled, and 5 unskilled workers. Now these are actual figures. 40 skilled, semi-skilled, unskilled. How many actual workers were working? 40 skilled, 10 and 5. The actual wages paid were 75, 60 and 52. 75, 60 and 52 per hour. 4 hours were lost due to machine breakdown. 4 hours for one worker, for all workers. Machine breakdown for how many hours? 4 hours. So actually they worked only for 36 hours, right? They worked for actually 36 hours. This I will be taking into consideration when I am finding out ideal time variance. And 1600 units were produced. 1600 units were produced. All right. Actual are, those are number of workers, right? how many hours a week actually they are working? 40 or 36? Why 36? 4 hours was machine breakdown in current week. So all workers will be working 4 hours less. So they will be working 36. I am right now writing 40 in my chart, but I know they are actually working for 36. I'll tell you why. These are 1600 hours, these are 400 hours, and these are 200 hours. These are my actual figures. Multiplication, I'll be doing it in my point. Can I compare this two chart? Why not? One is for 1600 units, one is for 2000. So I need to convert this chart for 1600 units. You just need to do cross multiplication. If 1200 hours are for 2000 units, then for 1600 units, it will be how many? So this will, answer I'll be getting is for 1600 units. So it will be 1200 into 1600 divided by 2000, which is 960. This will be 600 into 1600 divided by 2000, which is 480. This is 400 into 1600 divided by 2000, which is 320. Rate will remain same, 75, 65 and 50, because rates are per hour. So I am having standard cost, standard hours for actual output. I am having actual hours for actual output. Alright, there are three types of workers: skilled, semi-skilled and unskilled. Alright. What are actual hours worked? 1600, 400 and 200. Alright. Out of this, sum is ideal time. How much hour per week per worker is an ideal time? 4 hours. So what will be net actual hours? Now we know this, right? What is net actual hours? Actual hours minus ideal time. So only in actual hours, I wrote it 1600 hours instead of what? This will be 40 into 36. Net actual hours will be 40 into 36. It is how much? 1440 hours. What is this? Net actual hours of skilled workers. Why? Only 4 hours were abnormal. Only 4 hours were ideal time. Then how come I have reduced 160? 4 hours per worker is ideal time. 4 hour machine was breakdown. All the worker were ideal. So 160 will be ideal time of skilled. This will be 10 into 36. 360, this will be 5 into 36. $180. Do you understand difference between actual hours and net actual hours? Net actual hours are reducing the ideal time from actual hours. Net actual hours is actual hours minus ideal. I will be solving my question in an Excel sheet. I am having some basic information. Now this chart is useless for us. I will be using actual hours and other points. Standard hours, I am already knowing it. So what are standard hours? They are 960, 480, 320. 960, 480, 320. What is the standard rate? 75, 65, 50. 75, 65, 50. What are revised net actual hours? We have not yet found out. But we know answer of net actual hours. Net actual hours are 1440. Yes? Yes, it is 70. By mistake, we have written 75. Here also we should rectify it. It is 70. Net actual hours are 1440, 360, 180. So what are net actual hours? 1980. Actual hours we are also having it. Actual hours are 1600, 400, 200. 1600, 400, 200. Actual rate also we are having 75, 60 and 52. 75, 60 and 52. I am finding out revised net actual hours. What are my actual hours? Sorry, what are my net actual hours? Net actual hours are 1980. Total of this will be 1980. How to find out revised net actual hours? Can anyone help me out? It is net actual hours in standard ratio. 1980 in standard ratio, which is 960 is to 480 is to 320, or it is also 30 is to 15 is to 10. It is 30 is to 15 is to 10. Two, three, six. It is 6 is to 3 is to 2. 1980 into 6 divided by 11. 1080. 1980 into 3 divided by 11. 540. 1980 into 2 divided by 360. These are my revised net actual hours. 1080, 540, 360. Now you should just concentrate on this chart rather than trying to be with me in the chart. So we have found out standard hours into standard rate, which is 1,14,400. Revised net actual hours into standard rate, which is 128,700. Net actual hours into standard rate, which is 133,200. Actual hours into standard rate is 1,48,000, and actual hours into actual rate is 1,55,400. First column minus second column is labor sub efficiency variance. So 1,14,400 minus 1,28,700 will be minus 14,300. This minus this will be 14,300 and it will be negative. But we have also found out sub-efficiency labor variance of skilled, semi-skilled and unskilled. How we have found out? This minus this figure is nothing but labor sub-efficiency variance of skilled labor. Alright, labor mix variance is this figure. This figure minus this figure is nothing but sub-efficiency variance. Sorry, labor mix variance. 1,28,700 minus 1,33,200 and negative 4,500 is labor sub-efficient mix variance. This minus this will be labor ideal time variance, and this minus this will be nothing but labor rate variance. Total of labor sub-efficiency and labor mix variance is labor efficiency variance. So minus 14,300 minus 4,500 will be minus 18,800. Labor efficiency variance, labor ideal time variance and labor rate variance total will be nothing but labor cost variance, which is negative 40,000. Sir, should we find out all the variances by the subcategory also? It depends upon time. If you are having time, then you can find it out. But say if this is of 8 marks, believe me, you will not be having so much time to determine all inner column variance. That is, this is labor sub-efficiency variance. What is labor sub-efficiency of skilled, semi-skilled and unskilled? You will not be having time to find it out. Even they have not found out. No, they have found out in each and every case. Total variance is negative 40,000. We are going to 13.18. The standard cost of a chemical mixture is as follows. 60% of material A at 50 per kg, 40% of material B at 60 per kg. The standard loss is 25% on output, and loss is not on input. The standard loss, normal loss is on 25% on output and is expected in the production. The cost record for the period has shown the following usage. These are actual figures of raw material. The quantity processed was 680 kilograms. This is output of good product. From the above given, calculate all material variance. And as there are two variances, we can easily find out the mix variance also. Here, the only good point is that of normal loss. So, we are having actual figures. First, I am writing actual figures for actual output. Actual figures for actual output of 680 kilograms. Actual output is of 680 kgs. There are two materials A and B. Material A, material B. How much actual output, actual input is used of material? 540 kgs. And 260 kgs. So total you have used a raw material of 800 kgs. But what is your output? 680 kgs. So how much is your loss? And believe me, this is not a normal loss. This is actual loss, right? This is not a standard. This is actual loss. It is how much? 120 kgs. What is the total output? 680 kgs, for which we are drawing this column. This 540 kgs were purchased at the rate of rupees 60 and 260 kgs were purchased at the rate of rupees 50. This is a total rupees. I will be having actual column figure. I should prepare standard for which output? Actual output, and actual output is 680 kgs. Don't write down 800 kgs. 800 kgs is input. Output is 680 kgs. I want standard for actual output. So what should be output over here? 680 kgs. How much is normal loss? 120 kgs. It is actual loss. What CEO has told us what should be a normal loss? Standard loss of 25% on output is expected in production. Do 25% on output, 25% on 680. It is how much? 170 kgs. What is this? Normal loss. Then what should be the input? 680 plus 170. 850 kgs should be input. Standard, right? And in which ratio? Again, you will have to see the standard. Standard ratio is 60% is to 40%. So 60% is to 40% of 850. 850 into 60%. It is 510 kgs and 340 kgs. Total is 850 kgs of A and B minus normal loss will be 170 kgs and output will be 680 kgs. Alright. 680, this 680 into 25%. Is it 120? No. 680 into 25% is 170. Then why this is not 170? It is actual loss. Are you getting it? CEO has told you that if you want an output of 680 kgs, you are allowed a loss of 170 kgs, and so your input should be 850 kgs. What is the standard rate? Standard rate is 50 and 60 rupees. 50 and 60 rupees. Now believe me, practically these figures are not important for me. They were important to find out this 850 kgs, but now they are not important. I am finding out raw material all variances. It is the standard quantity into standard price, revised actual quantity into standard price, actual quantity into standard price, and actual quantity into actual price. Standard quantity I am knowing 510 and 340. Standard price I am knowing 50 and 60. Standard price is 50, 60, 50, 60. Actual price I am knowing 60 and 50. Actual quantity I am knowing 540 to 60. Never this figure comes in our chart, right? 680. Why? Why it does not come in our chart? 680. 680 is output and we are finding out variances of input, right? For comparison, it should be same, but we will never use 680 kgs anywhere. Actual quantity also we are knowing it is a 540 and 260. Revised actual quantity we will have to find it out. Actual quantity is 550. No, actual quantity is 80 kgs, 800 kgs. In standard ratio between A and B. Believe me, standard ratio between A and B will always be 60% and 40%. This will be 480 kgs. This will be 320 kgs. This is revised actual quantity. Actual quantity in standard ratio. 480 and 320. This minus this. Material yield variance. This minus this. Material mix variance. This minus this is material price variance. This plus this is material usage variance. This plus this will be material cost. Five ten into 50 will be 25,500. 340 into 60 will be 2400. This will be 45,900. 480 into 50 will be 24,000. 320 into 60 will be 19,200. This will be 43,200. 540 into 50, 27,000. 260 into 60, 15,600. This will be 42,600. 52,400. 13,000. Correct me if I'm wrong somewhere. 45,900 minus 43,200. 2,700. Overall, our answers are matching with the book. The table is not matching with the book, right? The table is, they have done it somewhat in a weird manner. They have done the same thing, but they have done in weird manner. First, they have found out cost for 800 kgs, then decided that if 800 kgs in the input, output will be 640 kgs. And if the 640 kgs output is having this cost, then what is the cost of 680 kgs? Which should not be done. This is not the logical process by which we'll be comparing the cost of this two. It is very simple. If the cost is of 680 kgs, I need to compare it with the cost of 680 kgs. Standard cost of 680 kgs. If you will see this chart, only one figure is actual, which is that. Yes, because the standard is for actual output. This figure I have found out by that 25% which is standard. So 850 I have got by that 25% which is standard. This I have divided in the ratio of 60 is to 40% which is also standard. So in this chart there is only one thing which is actual, which is 680. Otherwise it is standard cost for actual production. And this is one of the question which I like most. It is how many marks question? 10 marks. It can be solved in 2 minutes. ABC Limited has furnished the following information regarding the overhead for the month of June 2020. They have already given us variances. Fixed overhead total cost variance 2800. Fixed overhead volume variance 2000. Budgeted hours for June 2400. Budgeted overhead for June 12,000. Actual rate of recovery of overhead 8 per hour. From the above given information, calculate fixed overhead expenditure variance, actual overhead incurred, actual hours for actual production, fixed overhead capacity variance, standard hours for actual production, fixed overhead efficiency variance. I can find out if I draw my chart of fixed overhead variances. I start with actual output into standard rate. In today's introductory session only I told you what is this? Absorbed overhead. Standard hours into standard rate. Then we write down preferred fixed overhead, which will help us to find out calendar variance. I don't think in this question they are asking us calendar variance. So I am directly writing budgeted fixed overhead and actual fixed overhead. And please understand, they are saying us that total fixed overhead cost variance is negative 2800. So our last answer is negative 2800. Can you help me out? What will be this answer? This is which variance? This minus this. This minus this is efficiency variance. This minus this capacity, total, volume variance. This minus this expenditure variance, and this plus this will be nothing but 2800. But you all understand, right? We can find it out in this manner also. We can find it out difference of this two also. Fixed overhead volume variance is negative 2000. I think you can easily find out expenditure variance, right? If total variance is negative 2800, volume variance is negative 2000, then expenditure variance will be negative 800, because volume plus expenditure is nothing but total variance. Budgeted overhead, budgeted fixed overhead is 12,000. Can I write down over here? Budgeted fixed overhead is how much? 12,000. I think we can find out actual fixed overhead also. What will be actual fixed overhead? Can anyone tell me? 12,000 plus 800. Then only this figure will be negative 800, right? This minus this is equal to minus 800. So this answer should be 12,000. You can verify 12,000 minus 12,800 will be minus 800. I can find out even this figure. Right or wrong? I can find out this figure easily. What is this? 12,800. What is total variance? Negative 2,800. This minus this is equal to negative 2800. So this will be nothing but rupees 10,000. Verify. 10,000 minus 2,800 should be minus 12,800 should be 2,800. Actual rate of recovery of overhead is nothing but 8 per hour. All right. Budgeted hours for June are 2,500. So I can find out standard hours for actual production. So they even want this answer. We can find it out. We know total volume variance. It is 10,000 minus 12,000. It is minus 2,000. But we don't know capacity and efficiency both. Right? If budgeted overhead is given, budgeted hours is given, I can find out standard rate per hour. It is 12,000 divided by 2,400. What is the answer? Rupees 5. Actual rate of recovery is 8 per hour. Okay. Actual rate of recovery is 8 per. So this second column is actually actual hours into standard rate, right? So this is standard hours into standard rate per hour. We are having standard rate per hour. Standard rate per hour is 5. So this answer is 5. So I can get standard hours for actual production. Will be 10,000 divided by 5. 2,000 hours. So they are standard rate per hour. Standard rate, we are already knowing it is 5. Actual hours we don't know, but we are knowing actual rate recovered, that is rupees 8 per hour. And what is actual fixed overhead? 12,800. So 12,800 divided by 8. It is how many hours? 1,600 hours will be actual hours. So actual hours are 1,600 into 5. That is 8,000. So efficiency will be 10 minus 8 plus 2,000. 8 minus 12 will be minus 4,000, and I will be getting all the answers. Efficiency variance is positive 2,000. Capacity variance is negative 4,000. Volume variance is negative 2,000. Expenditure variance is negative 800. Actual fixed overhead is 12,800. Absorbed fixed overhead is 10,000. Total variance is negative 2,800. This is a good question to be asked in examination. Can be solved in 2-5 minutes, but it carries 10 marks. This is 13.20. Premier Industry has a small factory where 42 workers are employed on an average for 25 days a month, and they work 8 hours per day. The normal downtime is 15%. The firm has introduced standard costing for cost control. Its monthly budget for November 2020 shows that the budgeted variable and fixed overhead are 1,06,080 and 2,21,000. They are budgeted variable and budgeted fixed overhead. The firm reports the following details of actual performance for November 2020 after the end of the month. Actual hours worked are 8,100. Actual production expressed in standard hours. Now, what is this? They are hours. They are standard hours for actual production. Actual variable overhead is 1,02,000. Actual fixed overhead is 2 lakhs. We are going to do variable overhead variance, fixed overhead variance, and capacity ratios also are asked. So we are first going to variable variance. It is the standard hours into standard rate, actual hours into standard rate, actual variable overhead. I am knowing some figures. Actual variable overhead is 1,02,000. Even standard hours for actual production is given. Standard hours for actual production is 8,800. Standard variable overhead rate is not given. We will have to find it out. Actual hours worked is also given, 8,100. I will have to find out standard rate for variable overhead, that too per hour. I can easily find out. Premier Industry has a small factory with 52 workers. Employed on an average for 25 days a month. 25 days per month. And they work 8 hours a day. 8 hours per days will be cancelled. What is the answer of number of hours? 52 into 25 into 8. It is 10,400 hours. Is the loss normal? Yes. Normal downtime is 15%, minus 15%. What is the answer? 8840 are standard. What is budgeted variable cost? 1,06,080 rupees. 1,06,080 rupees. I can find out variable cost per unit, which is standard. One lakh 6,080 divided by 8840. Rupees 12. It is standard rate per hour. 12. You can find out the answers. Can you give me the answers? Second one. Third one. What is this minus this? 8,000. And what is this variance? Efficiency. This minus this. Expenditure negative 4,800. Net 3,600 variable cost variance. Fixed overhead will not be even difficult. I will be having actual output. No, I am not writing it down. It is standard hours into standard rate, actual hours into standard rate, budgeted fixed overhead, actual fixed overhead. Let me find out first figures which are already available. Actual fixed overhead is 2 lakhs. Actual is 2 lakhs. Budgeted fixed overhead is a 2,21,000. Standard hours for actual production is 8,800. And actual hours are 8,100. I will have to find out standard rate. Standard rate is always found out from total budgeted fixed overhead divided by total number of hours. I will be getting, I am already having total number of standard hours 8840. And what is the budgeted fixed overhead? 2,21,000. So 2,21,000 divided by 8840. What is the answer? Rupees 25 per hour. It is fixed overhead absorption rate, which is a standard rate even. 25. This minus this is efficiency variance. This minus this is capacity variance. This minus this is volume variance. This is expenditure variance. This plus this is volume variance. Can you give me the answers? 8,800 into 25. This is 2,21,000 and this is 2 lakh. This is a 21,000 positive. 2,20,000 minus 2,02,500 is plus 17,500. What is this? 2,02,500 minus 2,21,000? 18,500. Volume will be negative 1,000. Total will be plus 20,000. They also want us to find out capacity ratio, efficiency ratio and activity ratio. Capacity ratio, efficiency ratio and activity ratio. Efficiency ratio, I know it perfectly. It is based upon hours. If the hours are lower, I am having higher efficiency. Standard hours upon actual hours. Capacity ratio is actual hours divided by budgeted hours. Activity ratio will be standard hours upon budgeted hours or multiplication of first and second multiplied by 100. What are actual hours? Given in the question 8,100. What are standard hours? 8,800. What are budgeted hours? Budgeted hours 8,840. Alright, we have written here standard hours. Actually, they are budgeted hours. 8840 is budgeted hours. 8,800 is standard. 8,100 is actual. 8,100 divided by 8840 multiplied by 100. Standard hours are 8,800 upon actual hours are 8,100 multiplied by 100. This is 8,800 divided by 8840 multiplied by. Can you give me all three answers? 91.63% is capacity. Efficiency is, and activity is. Let us solve a couple of questions of standard costing. The standard output of product DJ is 25 units per hour in a manufacturing department of a company employing 100 workers. Now please understand, up till now what we were getting is a standard output is 25 units per hour. But here the case is different. In a manufacturing department where 100 workers are working, and if all that 100 workers work for 1 hour, then 25 units are manufactured. This is what the statement means. 100 workers in 1 hour can manufacture 25 units. So practically 100 hours, 25 units is a standard. So 4 hours, 1 unit is standard production. This is my standard. In 40 hours a week, the department produces 960 units of product DJ. Despite 5% of the time paid was lost due to an abnormal reason. The hourly wages rate actually paid were 6.20, 6 and 5.70. Respectively to Group A consisting of 10 workers, Group B consisting of 30 workers and Group C consisting of 60 workers. The standard wage rate per labor is the same for all 3 workers. So standard wage rate is common for all 3 workers. Say it is rupees X per hour. But whether he is under worker A, worker B or worker C, his standard wage is going to remain same. The labor efficiency variance is given by positive 240. We need to calculate all labor related variances. Let us find out what is my actual output. Actual output is 960 units. Standard is given for 1 unit is equal to 4 hours. So standard for actual is 960 units. How many hours total? Can I say it is 960 into 4? Because 4 hours is required for manufacturing 1 unit. So 960 into 4, 3840. 3840 will be standard hours. I don't know what is of A, what is of B and what is of C, because a segregation in standard is not given. I also know that overall rate will be X. And so standard cost for actual output will be 3840X. Let us go to actual cost. Actually, it is divided into 3 parts, which is A, B and C workers. A, B and C workers. We are going to find out actual hours. Actual hours directly is not given, but it is given that 10 workers work for 40 hours a week. So 10 workers work for 40 hours. 30 workers will also work for 40 hours. And 60 workers will also work for 40 hours. So what will be my actual number of hours are 400, 1200 and 2000. Total will be 4000. Now please understand there is a difference between actual hours and net actual hours. Net actual hours is actual hours minus abnormal loss of time. What are total actual hours? Sir, we will not require individual wise. No, because we are not going to find out mixed variance, because mixed variance is not possible. Why it is not possible? For mixed variance, we require revised actual net hours. And revised actual net hours is net hours in standard ratio. But the ratio of standard is not available between A, B and C. The CEO, the head of the department, feels that all the workers are same and the standard rate is same. So he has not given segregation of worker A type, B type and C type. Actually, he does not segregate the workers into A, B and C. So only total will be required, that is 4,000 hours minus abnormal loss of 5%. This will be 3,800, which will be my net actual hours. I will be doing labor variances. Even the rate, actual rate is given, it is 6.20, 6 and 5.70. Let me find out in labor variances what I get as an. How I find out labor variances is standard quantity, standard hours into standard rate, net actual hours into standard rate, actual hours into standard rate, actual hours into actual. Standard hours into standard rate, I am knowing the answer. And I am writing the total answer. It is the 3840x. Net actual hours into standard rate also I know. Net actual hours is 3,800 and standard rate is x for all the hours, 3,800x. Actual hours into standard rate. What are actual hours of 4,000? And standard rate is x for all 4,000 hours. So it will be 4,000x. And actual hours into actual rate, we can find it out from here, which will be 400 into 6.2 is equal to m plus 1200 into 6 is equal to m plus, and 2400 into 5.7 is equal to m plus. MRC is 23,360. So this answer is 23,360 rupees. Difference between this and this, and please understand this is total of A, B and C. This is efficiency variance. This minus this is idle time variance. And this minus this is labor rate variance. Total of all these three is labor cost variance. Also, efficiency variance is given, which they say is positive 240. So this answer is positive 240. So we can probably find out answer of x. 3840x minus 3800x is equal to positive 240. This is a 40x, so 6 rupees. X is equal to rupees 6. So this is 3840 into 6. 23,040 rupees. This will be 3,800 into 6. 22,800 rupees. This will be 24,000 rupees. And this answer is already available. So we can find out even this answer. 22,800 and 24,000 is 1,000 200, and it is idle time variance, so idle time variance is always negative. 24,000 minus 23,360 is positive 640. Total of all these three will be 240 minus 1,200 plus 640, which is minus 320. So good point. As far as variances is concerned, what was not given to us? The standard rate. Also, how this question was important, because we cannot find out mixed variance, because category wise answer of A, B and C workers in terms of number of hours as far as the standard is concerned is not given. Actually, they are not differentiating between laborer A type, laborer B type and laborer C type. They think all the laborers are same with a standard rate of X per unit. But when it is actual case, laborers are paid differently. And so this is a good question, whereby standard segregation is not available, actual segregation is available. So we will be practically doing everything in total answer. We have taken all total answers and found out the variance. Also, standard rate was not directly given. What was given was efficiency variance, and from efficiency variance we found out standard rate. And so this can be categorized as a very good question. Next question, C 13.16. X Associates undertakes to prepare income tax return. Now we are doing standard costing in some service sector. For individuals for a fee, they used weighted average method and actual cost for financial reporting purpose. However, for internal reporting, they use a standard cost system. The standard based on equivalent performance has been established as follows. Labor per return is 5 hours into 40 per hour. 240 is misprinted. Overhead per return is 5 hours into 20 per hour. Now you will see, sir, why there is no raw material? Because we are in service sector. In service sector, raw material will not be there. Only labor and overhead cost will be there. And for filing one return, 5 labor hours are required at the rate of rupees 40. So 200 rupees is a standard cost for filing one income tax return. And overhead is absorbed based upon labor hours. So it will be also 5 labor hours into 20 rupees per labor hour, which is 100 rupees. And so 300 rupees will be my standard cost. This is the standard cost for filing out one ITR. For the month of March, performance budgeted overhead is 98,000, and this is for March. Standard labor hours allowed. For standard labor hours allowed, the following additional information pertains to the month of March. And what is given are opening balances. Written in process, this is nothing but opening WIP, which is the 200 numbers, but they are only 25% complete. Written started in the March is 825, and written in process, this is closing WIP, which is 125. Cost data. March 1, written in process, labor and overhead. This is opening cost. March 31st, this is during the month. You are required to compute for each element equivalent unit of performance and actual cost per equivalent unit. And we are following weighted average method. So the first question will be more of process accounting rather than standard costing. This particular format, we have learned it in process accounting, and I am doing that process accounting. Please try to concentrate. There are two costs, labor cost overhead cost and total. Total labor cost last month it was the 12,000 and current month it is 1,78,000. So 12,000 plus 1,78,000. And overhead cost was 5,000 and 90,000. So 5,000 was opening and current month cost is 90,000, which is nothing but 95,000. This will be 1,78,000 plus 12,000, which is 1,90,000 rupees. Total cost will be 1,90,000 plus 95,000, 2,85,000. Is cost for what? Try to understand what we are doing. We were having opening return of 200. So there were 200 ITR in opening. And in current month, that is March, we have started 825 returns. So practically we are processing 1025 returns. And what we will do with this 1025 returns? Closing, there are 125 returns. Total are 1025. Out of which you are doing something on, still something on 125 return. So 900 return are fully completed. So in current month, what you have done? 900 return you have fully completed and 125 return you have completed 80%. So all the cost of opening plus current month cost is for completing this 900 return and this 125 return which are 80% complete. Now sir, what about opening stock which will be completed in current month? As we are following weighted average method, we will be merging all the units and finding out total cost. So only in current month cost we have added opening. So let us do this. I will be distributing between 900 and 125. 900 is completed units. And closing WIP is 120. We were doing statement of equivalent production in this manner: percentage completion equivalent units rupees, percentage completion equivalent unit rupees, and thus total answer will be rupees. The completed units are 100% complete and closing WIP are 80% complete. 900 into 100% is 900. Why I'm going fast? We have already done this. Some deeper question as compared to this question in process costing. 125 into 80% will be 100. Total will be 1000. Here also it will be 900 and 100. So this will be 1000. Labor cost per equivalent units will be rupees 190 and this will be rupees 95. Per equivalent unit overhead will be 95. And per equivalent unit total will be 190 plus 95 will be 280 rupees per unit. I just need to now divide the cost if I want. So 1,90,000 will be divided into 9:1 ratio, or 1 lakh, this is 190 into 900. 1,71,000. This will be 190 into 100, which is 19,000. Total will be 1,90,000. This will be 95 into 900. 85,500. This will be 9,500. Total will be 90. And this will be also divided. And estimated cost per equivalent units will be nothing but rupees 285 per unit. And this is actual cost per unit. What was then this 300? It was a standard cost per. This is what is asked in equation. For each element, equivalent unit of performance and actual cost per equivalent units. Actual cost of written in process. So they want this cost also. We will have to find it out. This answer will be 1,71,000 plus 85,500, 256,500. 256,500 is the cost for this 900 units, and cost of this 125 units which are 80% complete will be 19,000 plus 9,500, which is 28,500 rupees. This is cost of WIP, which is answer number B. The standard cost per written, we have already found out. The labor rate, labor efficiency variance, as well as overhead volume and overhead expenditure variance. So, we need to find out labor variance, and we will be doing it for the month of March. We will be doing it for the month of March. And in the month of March, practically, what will be the production or what will be the equivalent production? Because I know what is the cost in the month of March. Labor cost is 1,78,000 with 4,000 hours actual. So actual labor cost is 1,78,000. But I am talking only about March. I am not talking about that opening figure. So how many equivalent units are manufactured in March? How I can do it? It is closing stock or closing WIP plus 100% manufactured units. We normally term it as sold units, but as this is not a manufacturing sector, it is a service sector, we are just writing down 100% manufactured units minus opening stock. This many equivalent units will be manufactured in current year. Now what is closing stock? It is 125 into 80%, because for equivalent units we will have to take it as 100. 100% manufactured units, 900 minus opening stock was 200 with 25% complete. This will be 100 plus 900 minus 50 will be 950. Sir, you just told that we have manufactured 900 units. No, we have manufactured 900 units in March, out of which and additional 125 units which we have completed 80% minus 200 units which were 25% already complete. So this will be my manufacturing in March. So it is 950 units. So this is actual output in March. I will be doing labor variance, standard hours into standard rate, actual hours into standard rate, actual hours into actual. I am knowing this answer, so I can directly write it down. 1,78,000 rupees. Standard rate of labor probably I am knowing. labor per return of 5 hours is 40 per hour and I want per hour only. 40. Actual hours given are 4000. Standard rate is 40. Standard hours for actual production. Actual production is 950 units and 5 hours are required to manufacture 1 unit or 1 ITR. This is 950 into 5 into 40, which is 1,90,000. This is 1,60,000 rupees. This is 1,78,000 rupees. This minus this and this minus this. This will be labor efficiency variance. This is labor rate variance. This will be labor cost variance. 190 minus 160 will be plus 30,000. 160 minus 178 will be minus 18,000. This will be plus. This is labor variance. They are also asking us, question also asked overhead or volume variance. If it is overhead in volume variance, we will assume it is fixed overhead. So actual output into standard rate per output, actual hours into standard rate per hour, budgeted fixed overhead, actual fixed. Actual output, as we have decided, is 950 units into standard overhead rate per output is 100 rupees. Actual hours are 4,000 hours into overhead standard rate per hour is 20. Multiplied by 20 is 80,000. Budgeted fixed overhead directly is given. Budgeted overhead is 98,000. And actual fixed overhead is also directly given, which is 90,000. Efficiency variance. Capacity variance. This is expenditure variance. Efficiency variance will be 15,000 rupees. Capacity variance will be minus 18,000 rupees. This will be plus 8,000 rupees. This is termed as volume variance. This is minus 3,000. This is plus 8,000. And fixed overhead total cost variance will be plus 5,000 rupees. This is nothing but fixed overhead variance. Again, an excellent question as far as standard costing is concerned, because this is a merger of standard costing as well as process costing.